Well done, you, because this is what we were looking at. So I'm going to pull my screen over, and you heard me talk about this yesterday, and I put it on the chat as well. I want to say, look at the facts. So have you used Marine Traffic, Mini Cooper?
No, I just use Google Maps.
Marine Traffic is a really cool site, and when things go off in the Middle East, it's a bit like air traffic control, but this is for shipping. And so when you go on the site, you can just do, I mean, it's very easy if you're just searching this at home, Marine Traffic, boom, it's the top one there. And the bits in gray, obviously, is the country. Bring it right down to where we need to look at, and that would be the straight. So
ladies and gentlemen, we are back. This is overtime. Your eyes do not deceive you. This is a whole other thing that we're about to do here. Dylan Radigan is entertaining Tom in Milan, as best I can surmise, and Chris is in a heat wave trying to figure out why his house is 110 degrees on the inside. So these fine gentlemen are joining me. I'm Ilias Pivac from San Francisco. That's Mr. Mike Butler and Thomas Westwater from Chicago. Gentlemen, how goes it?
We're nice and cool in here. So, I was trying to walk Chris through his AC problem, but, can't handle the heat. So,
yeah, 110 is that is rough. That is rough.
Yeah. Inside one's house at 110, I'm not sure I'd have anything cogent to say about market action either.
No. And I just checked to see if there's a Mets game right now, but there's not. It's in 2 hours. So he's not there. He's not lying. He is fixing his AC.
Fingers crossed he can actually make it inside his house and see any of it at temperature below melting.
That's insane. Yeah. Stay safe out there, anyone on the East Coast. We had a little taste of it yesterday in Chicago, but the last couple days in Chicago, but it has cooled off dramatically.
It's been foggy and cool here in San Francisco, which I'm not complaining about in the slightest. Let's take a look at, by the way, view the transition here. A place where things are not cool. Micron. Mike, you were just talking about this in the green room before we got started. What in the world? What's going on here?
It's the classic meme of the thing like poking the stock saying do something, and then the green bar just shoots through his head. That's what's happening. Yeah, I mean, I did an earnings preview on Micron, and it looked like everything was good. I mean, they are investing in U.S. expansion, which I think is good for potential tariff stuff. I mean, they've just had an insane rally. Their stock had doubled from the low of April. And it just goes along with the story for the rest of the chippies. I mean, AMD, NVIDIA, very similar charts. But I was wondering if it was going to be able to continue. I mean, even when you have a stock perform like this, they still have to just crush their numbers for it to continue. So I don't have it in front of me, but I assume that they demolished numbers and they have some good news for the rest of the year.
It's interesting because if you look at the sector breakdown here, it's not what you might expect with this kind of a move. I mean, sure, tech is up a good 0.8% here, but generally not the world's most risk-on mix. Consumer discretionary and staples both down quite a lot. Discretionary down 1.25%, staples down 1.3, not really what you'd love to see. And if we look at
screens at Bloomberg here, I'm having to maneuver one screen, and I'm sure Rich would also love 4 wraparound screens for us here. So let's have a look at BP first, shall we?
Yeah, because BP has a market cap of 60 billion, and then Shell of 153 billion pounds.
Right, so let's have a look at that. BP.
Then we need the ADR line.
Yeah. There we are.
Yep.
Yeah, so there we go. You can see, let's just do the 1 hour chart. So that might give you, there we go. So quite a reaction there. And then let's have a look at Shell now, the ADR.
Opposite way.
Yeah, here we are. Voila. So that was a reaction there. I'm on the blast from the PCMs.
Yeah.
So immediately I called up some friends in Southeast Asia going, hey, have you guys heard anything about, BP? Because BP has trader friends. If you trade the space, they have been aggressively moving a lot of their functions that they can move to cheaper geographies, to places like Pune in India, and also to KL in Malaysia, and also to parts of Indonesia as well. And so I was trying to canvass all these friends that I've got out in those regions to find out whether they'd been told anything. But they've not just yet, but they've said it's all kind of masked in secrecy. If they haven't been told, at least they haven't heard of anyone, yes, that have been informed. So watch this space. Sometimes it's more interesting, especially when these companies say repeatedly, no talks have happened, right? So there is no.
Also on here, I've got interestingly,
without fire.
Bloomberg reported in May that Shell had been studying the merits of a takeover, but was waiting further stock and oil price declines before deciding whether to pursue a bid.
Yeah, that's right. And since that time, there were loads and loads of reports. Look it up as well, because a lot of people in the city, but also there were reports of Shell standing back for a bit to find out whether or not Chevron and ExxonMobil, so the US oil majors, were going to join and throw their hat in the ring. So a really interesting space. BP has, of course, been underperforming all its rivals. Let's have a look at the chart here now, looking at the BP stock there, and as you can see there, it's still very far off from the highs seen since February 2025, and it's still very far away from. Let's have a look at the monthly chart.
In the FTSE 100, obviously it's a market cap weighted index.
Yeah.
And BP and Shell, I believe, are both top 5. So therefore, any movements with one of these firms, of course, has a huge impact.
Yeah. And
on the FTSE 100.
Take a look at that. Nowhere near the highs seen in 2006. I mean, here's the problem with BP, right? Trader friends, if you're trading in the space, great divvy stock. But essentially what's happened is they've been slow to react. And in addition to restructuring its strategy, it's also gone the way of beyond petroleum, only to have Trump 2.0 come into play. And now it's back. The BP apparently stands for back to petroleum, people.
Back to petroleum.
Quickly. And so it's been a lot of painful restructuring on both sides, this pivot. Meanwhile, the Exxons and Chevrons, there was a bifurcation between the BP and Shell, so the European oil majors and the US oil majors, whilst the BPs and the Shells, European, decided to go, we're going to diversify into renewables and, that space. The Shell and the Exxons stood pat and, well, they didn't quite say it, but, they suggest, yeah. We're going to do what we do best, people. We're going to keep, digging, but we're going to maybe invest in some moonshot programs. Do you know what moonshot?
Moonshot. I've never heard that term.
So in the oil industry, moonshot just means like this could work out, but it's a real small chance.
So therefore, they invest a small amount of money in it.
Exactly. And they invest in things like carbon capture.
Right, okay.
Yeah? Not like true renewables, but how about if we try and put drones and have it monitoring the funnels where there's gas. Every time there's oil and gas, there's exploration. There's a lot of what they call leakage. So it's just fuel that's wasted and lost, right? So they're looking at capture techniques to reduce and make it more efficient.
If they spend a small amount of money on it, it doesn't really matter if it doesn't work out, right?
Yeah.
At least they've tried.
Yeah, there you go. Mini Cooper should be in oil and gas. You could be head of Moonshot. Moonshot. Right. So let's have a look elsewhere. We also had really interesting news overnight from Micron.
Yes, we've got Micron Technology. So for those who don't know, it's a leading memory semiconductor company, perfectly positioned for the AI boom. So yesterday, just after market close, we saw the share price shoot up and then it dropped off shortly after. I saw it myself. I was working the late shift till 9:30 UK time last night. Reason for this is they're doing very well on the sales front, but they didn't predict runaway growth, leading to a mismatch in expectations. Yeah, this would have been 9:05 where we saw that movement.
Yeah. And Micron as well. I mean, this is the thing. It's bet on this AI, right? Growing demand for this high bandwidth memory. And just taking a look at its stock as well. This is Seeking Alpha, another cool site, trader friends, that you might want to look at using because it gives you a really good snapshot overview. And I really like the way it's laid out. Seeking Alpha is also, if it's not still owned or part of Thomson Reuters, they took over this some time ago, and the idea was to spin it off after they put bells and whistles on it. But it gives you a really good overview of the PE. This is the forward, which is what we always talk about here. Rich and I always look at the forward PE, which is 18, so pretty good. Yeah, yield. There in 0.36, 0.3% there, and also revenue growth year on year, 71% there. It also gives us the short interest, which is something I look out for, which is quite handy. So Micron, if you come off my Seeking Alpha, let us know, guys, if you were trading Micron or you've got that on your in your portfolio. This is one that we look at a lot here, but having a look as well at the stock, which is MU.
Should be all sessions.
It is all sessions, which is why we like this one. Take a look at that. It is, strong upward momentum there still, but after these numbers, we will take a look at this in the all sessions as well, right? We have to wrap because otherwise we won't have time for guess the stock. This time it is a UK stock. Okay, you got your glasses on. And there will be a prize, trader friends. So get ready because the timer is on and we want the first person to guess the stock wins. If not, then Ange wins.
What's the clue?
The clue is, you want a clue? Yeah, you should be able to get.
It's got to be more than it's just a UK stock, right?
It's a UK stock. It should be easy to guess. Take a look at the most recent price movement. Here we go. Hey, 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 trader friends! Welcome back to Opening Bell with myself and Mini Cooper, who's going to ring the bell for us after this. But before we get to that, let's have a look at some of the guesses there. Monkey Man saying BP, Jugger saying none of mine. What does that mean? Neil also coming up with BP, but the person that won is Pocky 1977. Well done. Ring the bell. Let's go, Mini Cooper. Well, and we are off, trader friends, and it is looking early on here still very much like a risk on day. FTSE is pretty much flat there. Germany 40 is up 0.4%, and elsewhere it is looking like risk on. Really interesting stuff. I mean, not a surprise, it has to be said, because we're still seeing this market suggestion that the fragile ceasefire is going to hold. The whole BP and Shell story still awaiting further signs of life there. But after those moves yesterday, what do you think of these market moves? A slow grind higher?
Yeah. Well, the reason is because I think the conflict in the Middle East is more or less over. However, you never know. You never know what's going to happen.
Yeah, let's have a look at the individual movers, shall we? Just very quickly. Out of the board there, out of the gates, Entain up more than 2%, and Endeavour Mining and Rio Tinto as well higher. Talk us through some of the others.
It's okay if you zoom in a little bit more.
Yeah.
It's because the lighting, I think. I don't know if it's my eyesight, the lighting. We've got BP up 0.82%. We've got Anglo American up 81 basis points. You've got Fresnillo up 1.36%.
Good pronunciation. I'm very impressed. Very impressed. I can't say the same for Wardy and Lutmore.
I'll tell you that. We've got NatWest up 89 basis points, and we've got Shell up 75 basis points. Another bank up 69 basis points.
Yeah.
We've got Mr. McDonald's favourite stock, Vodafone, up 0.6%.
Yeah, and we are waiting to hear soon on an update from Elliot Hill as well. Let's have a look at the losers list. Let's change that over there. British American Tobacco, top of the losers list there. Mini Cooper, take us through some of the others.
And then Scottish Mortgage Investment Trust is down 81 basis points. We've got Unilever down 0.59%. Rolls-Royce was a lose, but now it looks like it's come back up.
Yeah.
Just slightly though, so 0.1%.
Yeah, interesting that HSBC and some of the other banks are moving a bit lower. I guess perhaps some easing off there because they were higher yesterday. Banks
just now we saw Standard Chartered and NatWest on they were gainers.
Yeah.
But only by a small bit.
Yeah. Let's cross over to Germany, shall we? Let's have a look at what's happening here. Commerzbank is up 1.8% there. We also have, let's have a look, Siemens Energy and Infineon, top three, amongst the top three there, up almost 2%. Defense names also. Take a look at Rheinmetall there, up 1.6% there.
See, we've got Adidas there, which is up 0.48%. We can talk a little bit about that later. Due to the fact that Nike are reporting this evening after close, so we can talk a little bit about Adidas.
Yeah, let's cross over, shall we? And not many losers there. Continental down 0.75%. MTU also down 0.5% there, not by much. Mercedes down just a touch.
Not many losers at all.
No, I mean, we had more of a reaction.
It seems like to me, DAX, I mean, just in general over the past 6 months is just doing pretty well.
Well, first was the repatriation and also the flow of US for out of US assets into Europe, right?
Correct. Yeah, and we saw that I know around February time, where a lot of the fund managers were moving from the US to Europe. So of course the DAX. But the things with the DAX, a lot of the companies, even though they're German, earn elsewhere. So even if the German economy isn't doing that well, you could argue it does have an impact, of course, on the DAX, but not as large as one may think.
And also, don't forget, in Europe, if you're a fund manager that has been told, right, you need to now diversify into Europe and come away and lighten your exposure to US assets. You're going to look at Europe, guys. You're going to look at a map and think which area or which region or which country is going to look like the safest bet. The UK economy is not doing great. France, you've got farmers throwing potatoes onto the streets, right? Working, trying to protect their 35 or 30 hour. Is it 35 or 30 hour work week?
I'm not sure, but that doesn't sound bad to me.
If only we had that here. But Germany looking pretty solid. So no surprise there that you're seeing inflows into stocks in that market. Having a look as well at some of the other key stories that cross the headlines that we haven't yet covered. You want to talk about paychecks?
Yeah, so paychecks, they reported before market open yesterday. They were down overall in the main session because this stock isn't all sessions, therefore we'd be able to trade it online from 2:30 to 9. It was down 9.4%.
Take a look at that.
So for those of you who don't know, Paychex is an industry-leading human capital management company, and they process payroll for 1 out of every 12 American private sector employees. And what it was, weaker earnings led to the reduction in the price of the stock, even though there was an advance in revenue.
Yep.
So interesting. I was going to say, you can actually call in and we can trade this in the pre-market for you, because the pre-market last night would have been from 9 till 2:30, and you got the post-market as well, which would have been from 9 till 1 in the morning. So you can call in if you are in a trade and you really want to get in or out, as an example, and we can do that for you over the phone.
Cool. And the other big one that is coming up, of course, the king of kicks.
Yes.
Nike.
Is that what you call it, the king of kicks?
Well, that was what it was known as
Are you
until its share price became like this.
Are you a Nike or Adidas person?
I am a Converse kind of person. Ta-da! Converse, yeah. And I must be the only person out there that watched Stranger Things just for the incredible wardrobe changes. Whoever was head of wardrobe for Stranger Things, unbelievable.
Would you even have a head of wardrobe? I didn't know it would be like a role.
Yeah, there is a role, head of wardrobe.
Oh,
so like if you have like Mad Max, you'd have a head of, like Fifth Element, they have a head
of like outfits.
Yeah,
or something.
so there's a theme, right? And so they're in charge of like making sure for Stranger Things, they completely nailed it. Because I was living in the US at the time, but back to Nike.
Let's talk Nike.
Yeah, is really a chart in pain that has been struggling to get back to its heady highs in 2021.
Yeah.
It has had a huge amount of restructuring as well. Those of you that trade this stock or invest in it, it has also really been criticized, slammed really, for just not being creative enough to gain growing market share in the young and upcoming market.
Yeah, I mean, its value over the past 3 years has halved.
Yeah.
Obviously, new CEO Elliot Hill came in October 2024. I mean, looking between, obviously you need a bit of time as a CEO. You can't just make things happen straight away. But between October 24 and now, from my perspective, in terms of like what I see people wearing out and about, I'd argue that 4 or 5 years ago, obviously you've got Air Forces, very popular, popular. And Jordans were quite popular. So a lot of people wearing Jordans. However, Dunks as well. I don't see as many people wearing them now.
But
so, after you.
Yeah, it's still. I mean, you hear Rich talk about the swoosh, waiting for the swoosh, the tick to change trend. But at the moment, this is what we always talk about here. The trend is your friend. Don't fight the trend. It's still very, very much in a downward trend. Also, taking a closer view here, it's interesting to note that it is struggling to even get to the lows of August 2024. Before we talk about the signs of a reversal from a technical viewpoint, you want to see inverse polarity, and that means that however much it fell here, it must have gained it back in order for the resistance or support to invert. Nike also, if you've gone into a shop recently, a lot of their shoes are just mushed into a pile. You don't see, the athletic side. You don't see female, offerings being pushed forward. It seems like they have lost their way, especially in the lower end.
What happened was this: they were basically trying to go off on their own, because initially what happened is they had good relationships with, let's say, Sports Direct, JD Sports, and now they're trying to rebuild that.
Yeah.
Because in my eyes, it was a big mistake, because, here in the UK, as an example, with JD Sports, if I was going to buy Nike, I'd probably go to JD Sports. Yeah.
And that dovetails really nicely to Andrew McKilvey's question.
What was Andrew's question?
On the trainer front, JD Sports up the last few days. Let's have a look at that. JD.
I was going to say I've got quite a little bit more on Nike to talk about.
We'll go back to Nike in a moment.
Okay.
But let's. Oh, do you want to finish off Nike first? Yeah.
So it expects a mid-teens revenue decline for Q4. So it's likely to be between 13 to 15%, which is significantly worse than analysts' expectations of 11.4% drop. Also on JD Sports, Nike and JD Sports have already launched a connected partnership in the UK, and they've also extended that in the US. So this allows customers to link their JD and Nike membership accounts for exclusive benefits and access to member-only products.
Yeah.
Interesting. Which I think is a good move from Nike, really.
Here's a connection to Andrew McKilvey and Mini Cooper. This is to do with JD Sports, and JD Sports can be used as a contrarian indicator. Plus, it can give you early insight to how to trade Nike. Bear with me. If you go into a JD Sports, it's the same as I do the same thing if I'm in the US. You go into a Walmart or sometimes they have it in Costco. There's almost like a last season's discount area.
Like a sale rail.
Yeah, sale rail. Yeah. Sale rack, sale rail, sale. In the US, it's like a sale mountain because it's stacked really high. I've got his interest up right now. He's looking at me really.
No.
And the bigger the Nike pile, the more this is going to be a stock in pain, the more it's going to continue. And the Nike pile in the US last summer was much larger than the Skechers pile. So that tells you a lot. JD Sport, just answering that for you, Andrew McKilvey, just putting up the chart there, JD Sports, having a look at that for you. Also, the question from Andrew is on the trader front, JD Sports up the last few days. Do you know why? Well, I can tell you that in the last few days, there has been some movement on the director's remuneration policy, get that out, and also the stocks being held. So a helpful hint there, Andrew McKelvey, look at that for some clues there. It doesn't exactly tell me on this what is in there, but it is interesting that has happened. So I hear the gallery trying to talk to me. Right, here is guess the stock results. Let's bring it up. But here we are. We have an early winner who was Parky 1977. Thanks all of you that also try to guess this chart. But Parky, send me your email on ask@ig.com and I'll get that sent to you ASAP. For those of you that are watching, slam the like and subscribe button so we can bring you more quizzes. And the next prize will be Mini Cooper. I can send him out as well. too. David Boise coming online saying looking to get long Nike after tonight's earnings.
On that, Axel's done a great article on Nike. So if you just type into Google, another web browser, IG trading Nike, then it will come up with an earnings preview from Axel.
Yeah, and I'm going to put that up for you so you can find it easily as well. So as Luke Cooper said,
Adidas has been getting a little bit of market share from Nike because, of course, Nike's biggest competitor is Adidas. I've looked at their share price before coming on, of course, and since 2025, it has come off a fair bit.
Yeah. Come off that, I'll put up Adidas for you.
Because I know there's greater focus on the clothing line with Adidas now. And in addition to that, they've got a target of basically become the #1 sportswear brand in all markets, except the US, of course, where Nike dominates. But I know they've both been struggling in Asia.
They are definitely both struggling in Asia, losing share to the incumbents and the new kids on the block. The Ons, I've not tried them before. The Hockers.
Very comfy.
Are they very comfy? You've tried them?
And Ron Dog's always walking around in Hockers.
Oh, I heard from Rich that there's more of a bounce, there's more support. Is that
I know it looks like they've got quite a bit of support to like make you like a good 3-4 inches tall. That's probably why Ronnie's wearing them.
Right, Boise, Nike, just giving you some of the top lines. It could be poor indeed. Nike expected to report its 5th consecutive quarter of sales decline in the 4th quarter. This will be closely watched by investors who are wanting to know how exactly they are going to do a U-turn, run a U-turn on its
well, they've got to do something.
Share price. I mean, it's such a strong stock that Issa and I made a bet on it recently. So from Friday, 12 months from last Friday, he bet that the recovery in Nike shares will be higher than Lululemon's. And I bet that Lululemon's share recovery will be better than Nike's.
The thing is, Lululemon, in terms of stock price, hasn't done that well.
I know.
Big sell off. So
yes, so that's why I think it's fair game, but it's indicative as we're counting down to GDP numbers and durable goods as well. How hard the consumer staples are finding it at the moment.
I mean, Lululemon's has good growth in China, but here I've got on Lululemon Q1 2025 results beat expectations, but management cut the full year earnings guidance. As a result of that, shares plunged 20% on the news, which is huge drop. Huge drop.
Yeah. So, and I don't expect those headwinds to fall away anytime soon until we hopefully get some rate cuts. Right. We are going to a quick break, but don't go away. Pop that kettle on. Go and get your toast. Go and get your muesli or whatever you eat. Monkey band. Do some of your exercises whilst we get Luke and Chris, who will be taking you through fast markets. Here we go, here we go. It's actually me and Luke, and then it's Luke Moore and Chris.
The people must be disappointed.
I told them, well, I think this is what happens when Rich and Phil, sort off to the beach and, leave me here.
Surely Phil can work from Malaga.
I know, right?
What's all that about?
I know. I called in from Milan.
Yeah.
Right? We had, who is it? Dylan calling in from Milan.
Yeah.
So surely Malaga's connection should be quite good. Right, just checking in on... you love Moonpig, don't you? But look at that.
I'm always
move.
telling a Moonpig card.
Oh, down 7.3%. I mean, that is really disappointing. And those numbers, coming after its forecast, right? Slower earnings growth. You haven't been buying enough cards. Literally.
I'm always buying cards on there.
All right, let's have a poll if we can. How many of you, and you can just put it on the chat because, we've got 2 stellar directors in the house. Call out to Terence and Dom, who is in the Trade Live with IG gallery. Loads of applause there because we are running the ship. 2 people down and doing a stellar job, Terence and Dom there. Let's, if you can, just put in on the left-hand side, because let us know how many of you use Moonpig products or have used Moonpig products.
From the top of my head, I don't know who Moonpig's competitors are. If I was going to do a card online and I want a photo, I'd just go and use Moonpig, and that's the only company I know.
Yeah. I mean,
I remember their adverts being pretty good when I was younger.
They are really good. And also, the closest competitor I can think of is Snappy Snaps, but it's a poor competitor.
Yeah.
Right? Because it's not, they don't offer I think Moonpig does next day delivery as well.
Yeah. Moonpig's pretty good.
And they have a whole range of gifts, not just cards.
Yeah, I've seen that. However, I've personally never opted for them. I've seen flowers, so it was my nan's birthday. I wanted to get some flowers, but I'd rather go to the local flower shop and order them from there rather than on Moonpig.
Yeah.
But I definitely, if I was going to go for cards and I want to include a photo particularly, definitely use Moonpig.
Yeah, so Moonpig, saying expects 8 to 12% rise in adjusted earnings per share in 2026. Also, goodbye Nikhil Rayatata after 7 years with the company. Is this the reason for this more than 7% rip lower? Do you think?
Interesting. So, I've got the RNS here, and like you said, strong adjusted EPS growth, high free cash flow, driven by the ongoing strength of the Moonpig brand. See,
I think it's more to do with Nikhil. I think everyone knew that, the UK economy is not great. Everyone knew that, the consumer space isn't great. But the fact that it's not just Nikhil stepping down, it is the fact, people, that there is no successor yet. They've just said that the search is on, but they don't have someone to take over. So that could be the reason why this move is so severe. But also some other big movers. Let's just have a look here to check for you. I believe I saw something cross earlier from my dashboard. Tesco not moving as much now, down around up around 0.25%. They reported a pickup recently. That's not moving much by now. But Tesco, out of the big 4, has been looking relatively good compared to the Sanos and the Marks and Spencers.
Love to see that, as I worked for Tesco for a year.
Oh, did you?
Yeah.
What did you do at Tesco?
Click and collect. Click and collect. Yeah.
I mean, that's been a growth business for them, right?
Yeah. Assuming Tesco still has the largest share, but obviously you've got Aldi and Lidl, who are doing pretty well, and I know I've taken a fair bit of market share, especially due to the fact that they are cheaper, and we've got the cost of living crisis here in the UK.
Yeah. The other one that has been moving quite a bit Enes and Maurits. I hope Ronnie's listening to this. That's my best Swedish accent there. It is up. Let's have a look. Up more than 7%, people. On track for its best day since March 2024. So another big mover there for you. Some of the others that are moving quite rapidly as well. Worldline and also we talked about Moonpig already. That's down more than 7%. Vallejo also up almost 3%. This is after Morgan Stanley raised it to overweight from underweight. Right, what else is on your radar? I'm just going to check on some of the calls here.
I'm looking on the LSE website because what I do, I come in just before they release the RNS at 7 in the morning, and then I send that out to all the clients who hold a position in that stock, so they're aware at market open at 8 a.m. of what the news is on that stock, and if they want to keep their position, if they want to close, or what they want to do. So I usually send that out. And on here we have got Volex, not that I know too much about them, preliminary group results for FY25.
Let's also take you through some of the key headlines. If you're just joining, welcome to you. We have Trump also, just as a reminder, saying he may name a successor to power early. This is according to a Wall Street Journal report. The ceasefire in the Middle East, still fragile, but appearing markets, though, suggesting that it appears to hold. And also Micron, we talked about this earlier, didn't we? Beat the street on its Q3 earnings, and Shell reportedly now denying the talks with BP, which actually in the city sometimes is known as the first sign that there have been talks.
It didn't take them long yesterday to deny the Wall Street Journal reports, which suggested that the takeover was on. But
yeah, key macro events. Let's cover that as well, because it's all about growth and the consumer. We get the final reading of Q1 GDP.
In my personal opinion now is, since Trump's got in, macro events aren't as obviously they are important, but they're not as important as they were. As an example, Trump can just tweet and the markets move like that. When Biden previously it just wasn't the case, but now, let's say before you've got NFPs, you've got CPI, they were things which would cause, what we're looking at more, but now it's just not as relevant. It is, but it's not as relevant in my eyes.
Well, the focus has shifted, right? Yeah. The interesting thing too, Matt Arb and I were talking about this, is that some of the not as relevant one during usual times, sometimes the B-listers can also suddenly become important in quiet weeks, but it's certainly not a quiet week this week because most eyes are still on the ceasefire, which is still quite fragile there. We also have core PCE jobless claims as well, and also don't forget after the close we have Nike. And we've covered that already. Let's just take a look at the commodities space as well, because we haven't looked at that. We still have WTI holding up quite well there, up 0.5% there, and Brent as well, up 0.5% as the ceasefire appears to be holding. Gold pretty much up 0.5%, but really trading sideways around the previous session's levels, ahead of some Fed speakers expected later today. And copper, let's have a look at copper, because copper is a really interesting one. A lot of your clients trade copper?
I wouldn't say so, not compared to oil, gold, silver, nat gas. They're the more popular commodities with copper. And I genuinely don't have conversations with clients over the phone about it.
Now, so I want to put up copper for you, trader friends, because this is what I like to illustrate here. And you can see I have 3 perforated lines in yellow, so it's easy for you to see at home. These are the lines of interest for me. And once we get a close above, the next target is now fully drawn out. So you can see I've even put a little text box there to remind and you know, where the next level is. So it's really easy and simple. You can put this also on your alerts. Don't let this stop you from making an alert, because you can also choose to, if you decide to set an alert, and this will then come through to your platform or your phone. But copper really getting underpinned by the weaker dollar, right? And also watch all data out of China, because recently we're seeing this lift as well in copper, thanks to smooth music from Premier Li in China saying that they're going to boost consumption in terms of copper. Right, so how many more minutes have we got to go? 2 minutes. Let's get you through some of the potential key moves later.
We've got something from Kirky there. The announcement from Shell mentions that having now announced that they can't bid for the next 6 months due to UK regulations.
Yeah. So.
And we've got Funky Pigeon for cards. That is one I know, to be fair. Thank you very much, Jim John.
Have we got a result for the polls? Dom and Terence? Yeah, let's have a look. They sell birthday cards with bad jokes. Chugga. Right, here we are. Read it out.
Only 13%.
Oh.
I'm shocked.
Wow. Wow. I am shocked too.
It's made me a little bit upset, actually.
Oh.
Seriously. I'd recommend it for those people that said no.
Oh, he's upset. Mini Cooper's upset. I would recommend it too. I mean, if not for anything, but just I like the fact that I don't have to go to the post office.
Exactly, yeah.
So I have used, I mean, Pig. Also, Pesa Mali, good morning to you. Haven't seen you on before, so welcome to the show. Whereabouts are you? And Jim John, Funky Pigeon, that's right. They're also good, but I've never tried them before. We're about to go to the break, but just to get you across, we also have Diageo with upgrades. Entain as well had an upgrade from Goldman. ASML downgrade by Jeffries. And last but not least, there's also, I believe, other Nike, Walgreens later on today. Right, how's the rest of your day panning out, Mini Cooper?
Just on desk. I'll do inbound calls, few outbound. I've got to do some prep on seminars, which we're going to have upcoming for our premium traders as well.
Right, cool. Parky1977, send me your address on ask@ig.com. Hit the like and subscribe button, people, and we will have Luke Moore and Chris Beecham up after this.
Cool.
If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, oh, we got to have this guy. And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate. I know Eliminate. You were on Eliminate. Oh my God.
You've seen it?
Have you met me? Yes, I've seen Eliminate.
Did you get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's
No.
that woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free
Have
diet.
you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custard and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin, that's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can, because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing?
Use it. It's just occasionally you dust it off and think, maybe we think about this.
Does it become... When deals are this big, obviously a lot of people know about them. If let's make something up in the sense and say, if this was to happen, it's going to have been worked on for months with a lot of people. Everybody signed up to NDAs, and so anything like this, if it leaks, that's when the denials come out. Has to be.
Yes, and the old joke is never believe anything until it's officially denied. Is the old joke from the USSR.
Really?
Until someone says, no, it's not happening, it's definitely happening. And this is the key thing, really. And it's almost done deliberately, I think, to sort of flush out other bidders. Because if you are thinking about this, you roughly want to know where the price is. Because you can think what Shell can say, well, we think BP is worth this.
Yeah.
And we're prepared to bid this. Others might come in and say something different. So the idea is maybe almost, and now as they say, Shell, we can't bid for 6 months. So we sort of ruled ourselves out in a sense, unless we're specifically invited by BP. So it's almost tipping their hand to see who else is going to come out of the woodwork now, and is BP maybe going to be happier with a Shell deal than it is with some private equity deal? We don't know.
Yeah. So I think what it's worth looking at is if we could pop this back up on the screen, why?
Yeah.
So why would they do this? And so you've got here the reasons on the left as to why they might acquire them, and the reasons on the reasons on the right as to why they wouldn't. So clearly, Shell is much bigger than BP. Okay, and actually what I'm just going to do is I'm just going to skip forward to the 5-year share price performance, and you can see really where it went wrong. They never really bounced after COVID.
No.
This is, of course, a relative basis. I've benchmarked it for 2019, and you can see in 2019 they were roughly the same price, and that's when they really started to diverge. And actually, Chris, you've got a really good chart that I'm just going to flag up.
Yeah, using one of my favourite functions, again, I've said about before, total return. Look at the total return of not just the price, but the dividends included. So I've compared this, the last 5 years, S&P, the FTSE 350, then look at the oil and gas ETF XOP, I think it is, and then the sort of big four that we're talking about here. And the key outlier there is BP, because it's not been a bad 5 years for markets, and yet BP is only up nearly 40% over the last 5 years.
The S&P doubled.
Yeah, the S&P's doubled. Shell and Chevron, Exxon, absolutely storming performance.
Yeah.
So if you'd picked anything but BP, you'd have done all right. So you can understand why investors in BP feel aggrieved. And there's all these changes of management. People saying, look, the company doesn't know what it's doing. Essentially, everyone else is doing okay in what has been a very choppy time for all markets. If you think where oil's been and gone over the past 5 years, and yet BP really struggling, partly I suppose because of that massive green transition thing that we were going to be big in green. We're not British Petroleum anymore. We're be something else.
It was only recently, actually, just while I pop this back onto the other side. It was only recently that I found out that BP was founded in Iran.
Yeah, it's the Anglo-Iranian Oil Company, which is interesting given current events because it was created to take control of the oil in Iran, actually for the Royal Navy. So we don't want coal, we want oil because it's cleaner and quicker. And so they did that, and then eventually was nationalised by the Iranian government in the 50s, which then led to a coup in Iran, really, by the US and UK, which the Iranians are still justifiably angry about, which partly explains why they hate America.
Well, supposedly
quite
it was
so much.
It was kind of before there was oil in Iran, before there was kind of discoveries, we went across and said to the government, I'll give you a 60-30 split. We take 30%, you keep 60.
Yeah.
And they struck oil and
suddenly
went on for it.
Exactly. And it was a massive sort of expat UK community over there. Huge numbers of people obviously work in the oil industry in Iran.
Yeah.
It has changed massively. Of course, it was interesting when you had Deepwater Horizon and Obama referring to BP as British Petroleum, which went down very badly because they've not been British Petroleum for a very long time in BP.
Okay, so what makes BP attractive? Of course, I imagine the price for one, but we've found that scale is going to be a big reason. So if you look at BP's attractive assets, they actually have some of the most valuable liquid natural gas operations, certainly traded in the UK or certainly kind of outside of these majors that we've already discussed. And they've got a really good trading business. They've got a great trading business, and they still have some strategic oil and gas reserves. So they do have some targets. They of course have been hampered by the kind of move towards green assets, and that's kind of been distracted. And that's of course why Elliott Management took a stake last year, I believe. They looked to try and take a 5% stake. So this is potentially
putting pressure on BP to change its style. Exactly.
Yeah. And so we know why. Okay, the valuations look attractive. They do have some very good assets, and there's a lot to strip off. So what are the key challenges there then?
Well, I think the obvious thing is that regulatory hurdles. Someone's going to say, look, the two massive oil companies, what does that do to the market, particularly in the UK? And also the fact that it's just carrying so much debt. Now, you're going to acquire a fairly cheap multiple compared to where it was, but it is going to be quite a load to take on for Shell. I don't know what Shell's debt is at the moment, but yeah, another 50 billion of debt. It's not great. And what is possibly an uncertain time for oil prices, you could argue maybe they are poised to go high. Investors are fairly underweight oil at the moment. They don't love oil assets, understandably, given the way oil's performed. So you could argue maybe there's some upside here, but quite a big sort of lunch for Shell.
Yeah, but you'd also argue, though, looking back at the total returns that we've seen for the bigger players, they've been fantastically. They've been performing better than the S&P over the past timescale on whatever that chart was.
Yeah.
And so whilst the underlying hasn't necessarily played a massive part, the big players have played a massive part.
Yeah, they've done really, really well in that sense. And Shell, you get a dividend yield of about 4% as an investor, market cap of 150, which is smaller than the US ones, of course. So it would at least create, talking about how UK companies have been so poor performers, it would at least create something that has a bit more heft to take on these US giants from all these years of consolidation.
Is in your opinion, because I don't look at debt as much as I probably should do, on a market cap, on BP's market cap of 58, net debt of 21, so that's roughly what, nearly 35-40% gearing?
Yeah, that's
that
quite
normal?
brutal. I think for BP it's higher than it should be for the sector.
Okay.
Really. So there's just, because it's been such a problem, I think, really. So look at the total liabilities when you chuck, again, pensions in as well, then it's a big thing to swallow for Shell, really. But it's like, if you want to be on a global stage, you have to make this kind of move, and you can argue maybe they're swooping now when BP has been such a poor performer rather than waiting another 6 months. really, when someone else might come in, I think.
And that's the question. So if we know now that Shell aren't allowed to come back for 6 months, who else comes in to talk about them? And I think that's where it becomes a little bit more of an interesting conversation. So the potential suitors now, if you look at the big US players, I'm just going to see if I can make that a little bit bigger for your and mine eyes. Shell is probably the most obvious candidate, but we now know that they're going to have to take a bit of a backward step. I think the crown jewel of BP is then liquid natural gas business.
Yeah.
As we all know, over the next kind of 20 years, liquid natural gas demand is expected to grow by about 50%, with a lot of growth over in Asia. It's being touted as the bridge fuel. So as we look to kind of get towards the energy transition, it produces 30% less CO2 than oil and 40% less than coal. And so it's increasingly seen as not necessarily a green fuel, but it's seen as greener than the incumbent.
That's the most important thing, really.
Yeah, correct. So it's still a strategic asset. So our research would suggest that ExxonMobil is probably up there with Total and Chevron. But don't forget about private equity.
Yeah.
I don't know. Obviously, Elliott have got a stake. Could they form some form of conglomerate to take a look at it, or would that be an attractive asset flip for them to take it on and kind of strip everything out and do everything they're already putting pressure on the board to do, but do it themselves?
Yeah, that's the key thing, really. Would a private equity sort of dismantle a lot of BP and leave it out there? And Andrew McKelvey saying there, yes, but the other problem with BP, of course, how much of this has been tied up in litigation in US courts and the reputational damage.
From deep water?
Yeah, from deep water and all this. Does Shell want that problem? Because you doesn't want to be another Bayer Monsanto moment when you take over what looks like a good deal and then suddenly you're saddled with this huge amount of court cases.
Well, there is a reason, right? You tell me all the time, right? The reason why something goes down, just because something's cheap doesn't mean that it's time to buy it.
Exactly, it's cheap for a reason, and BP probably definitely is looking at the sort of forecast multiples. Remember, it's trading at 11 times earnings for the full year, and then 10 times earnings for next year's earnings. So it is cheap versus Shell at 16 times earnings. But obviously it's one of those cheap for a reason. So would you want that? But the time has to, maybe the time is now, and I think people are looking at it just saying, look, BP is poised for something. Somebody's going to come in at least at some point and say,
well, if it's trading on 10 times multiples, that's cheap.
It is cheap.
That is cheap.
But it's still a global oil company with plenty to recommend it.
And it still pays a dividend, right?
Yeah. Yes, dividend yield currently about 6.8%, so fairly.
Which is double the FTSE from memory? FTSE 100 average?
I think so. Testing my dividend knowledge there. What the yield is off the top of my head.
I think, I looked it up recently, and I think it's around 3.2%. FTSE 100 dividend. It is, if Google will load for me, 3.4% current FTSE 100 yield. Yeah, so roughly double.
So that, and don't forget, of course, that BP return is with dividends included, so that's why they've done so poorly. If it wasn't for the dividend, they would probably be in almost negative territory at this point. So it's a very interesting story, and I expect other names will appear, I think. And I think the more Shell deny this vehemently, the more likely it is that they've had a look over the last few days.
Well, yeah, fascinating. What else is going on in the world? NASDAQ at all-time highs?
New all-time highs.
Celebration for everybody in tech.
And everyone's looking at this going, it can't possibly keep going up. Look at all the problems that go with it. And you're right in a sense, and tariff deadline day is what, the 9th of July?
Yeah, I think so.
So that is approaching, although, again, they were talking about deals being done yesterday. But I think some people are right to ask, why are we trading right up here when there's so much uncertainty? And it's hard to rationalise. Now, the thing is, remember, you don't have to rationalise things in the markets, it just is. And if you're looking at this from a trading perspective, clearly the momentum is the upside. If you're looking at this from an investing perspective, maybe as Rich, but I can probably hear him shouting from Milan, why would you want this at this kind of level? Really, it's not cheap as it was back in April.
No,
it's
but
still
I'm
facing the same problems.
I'm a big proponent of momentum.
Yeah.
And I think the
very powerful force.
It's a very powerful force. And I think if you look at the typically buying all-time highs is not a bad way to do business.
No. Well, if you're prepared to hold long enough, of course.
If you're prepared to hold long enough, yeah. So even those investors that use all-time highs as a buying opportunity have typically been rewarded. But as a trader, you're probably going to want to start to look at downside protection. You know, if you were worried about a pullback, the volatility is low at the moment.
It is.
So you know, to borrow a Tom Sosnoff phrase, you want to buy protection when no one else needs it.
Yeah.
So there are some cheap puts out there. You know, you probably
just as a kind of insurance policy, really, just to say this might be volatile at this point, and you might see further uncertainty. But of course, you've got to remember all this money that came sloshing out of US markets in April when tariffs hit, and the fund manager surveys keep saying people don't want to be in the US. When that flips, because the more this keeps going up, the more fund managers are going to say, look, I've got to be back in this because I'm missing out on returns.
Do you think the pound is playing a part in that as well, from our perspective?
It's partly, yes.
137 this morning.
Yeah, and a lot of the dollar weakness as well, because again, you've had Trump and Powell overnight. The Trump Powell show has taken another turn because did he call him stupid again overnight, I think?
He called him stupid, and he wants to announce the next Fed chair by September.
Yeah, and there's a jockeying from position this week amongst Fed members, Waller most notably, saying, I think we'd like to cut rates. So they're clearly auditioning for the position.
September, October.
Yeah,
so they're expected.
There are people saying, and even if you do get someone in, say you picked a completely random candidate from outside, you'd still be facing a Fed board that's mostly, cautious people that are previous appointees. So you wouldn't suddenly get a Fed that comes on, we're going to cut rates by 200 basis points, everybody, we're going to have a massive party.
Yeah. I was listening to, I like the All In podcast. So have you come across these guys? It's, I'm going to butcher his surname, but Shamath Palihapitiya. He was a kind of big VC. It's a collection of VCs. And David Sachs, who is the crypto czar over in the States, is a guest, and he's always on there. And they did a big thing this week about this, and they were saying, actually, even if you take off Jay Powell, the voting members are more Democrat than they are Republican. Yeah. And so if you're trying to argue that Powell isn't cutting rates because of a political reason, say you'd slice the head off the dragon, I don't think it necessarily changes the voting mix. No. So you have to then go through and start to kind of create.
Don't change the entire board. You'd need plenty of new members. You wouldn't get. It's not Powell blocking.
Correct.
They're not. You can see the minutes. You can see the voting. They're not desperately calling for rate cuts in every meeting, and Powell standing in the doorway saying no. It's the whole committee saying we don't think it's right. And it's interesting having the vice president on X yesterday saying, oh, why did Powell cut by 50 basis points before the election? He's not cutting now. But you can explain to Mr. Vance, slow as he is sometimes, that it's because, as Powell said this week in Congress, they are just waiting to see where this tariff inflation comes from. And Powell can't say, it's your tariffs, by the way, sunshine. But that's essentially what they're waiting for, to see whether this does, if it's just a one-off and they can look through it, or if it is going to be more sustained.
Let's just have a little look at that FedWatch tool just to see kind of where the probabilities are now, because I believe they've changed quite a lot recently.
Yeah.
And I'll zoom in a little bit more. So you've now got that September meeting is now looking more and more likely like it's going to cut. And I believe that's come up fairly recently. So that
because those two speakers this week have said, I think I would have. These people that voted for a hold in June are now saying, oh, I would vote for a cut in July. That's a bit silly. But yes, it does greatly boost the chances of a September move, really. And Morgan Stanley says they've got 6 rate cuts penciled in for next year.
By next year?
Which is fair, by the end of next year, which is a fairly punchy view. And you would assume, it doesn't include a recession in the forecast, so I don't quite know how they're going to suggest the Fed could sell 6 rate cuts outside of a recession without inducing some kind of...
Well, I mean, I suppose...
markets.
I mean, the probabilities get pretty broad down here. So in terms of how to read this chart, you've got the ranges are always set when it comes to these rates. So you don't just cut to say 3%, you cut to a range between 3 and 3.25. And so these are the various different ranges that you're seeing up here. It's suggesting that by July of 2026, there's a 30% chance rates are going to be within the 3 to 3.25 range. So that would suggest that the market is currently pricing in 1, 2... Well, I mean, there's no real majority for 6, because that would say we're here now, 1, 2, 3, 4, 5, 6, only a 30% chance. I mean, there's not really consensus outside of 4 by January.
No, exactly. So I think it's pushing it, I think, really. And markets can cope with this. This is the key thing of the market is hoping for Fed rate cuts. I don't think it is particularly. I think it's quite content. What it will be bothered about is if the Fed were to start hiking rates, but that's not the way it is. If you look at the 2-year, it's continued to track lower, so the Fed rate is actually above the 2-year at the end. So you can argue that the impetus is still for cutting rates. And the gap between the interest rates and the 2-year was wider back in August, September last year when it did cut rates.
But what about the stagflation argument?
Well, this is the key thing, yes. How much is inflation going to impact everything? We're still waiting for this. We're still waiting for fresh CPI data. We won't really get a conclusion probably until August, September, I think. Everyone's saying it might be July or August. I think it's going to be later than that. If you look at Trump's first term and tariffs, inflation didn't really start to show up until about 5 to 6 months afterwards. So this is the problem for the Fed, that if you cut now and then you have to reverse course, that doesn't make you look good in the world of central banking. And in sort of image is almost everything, really, looking like you're competent, not having to change policy suddenly.
Yeah, but I suppose that's worse, isn't it? Because I know I've seen him touting off, well, you could cut by 1%, and if inflation goes back up, you just raise them again. That is, I mean, imagine if you're trying to remortgage. Imagine if you're trying to create, business loans. Imagine if you're a CFO in a company trying to buy an asset or trying to, potentially build an asset. If you're in, this reshoring efforts. If you're borrowing money and the rates are all over the place, that's probably more damaging from an uncertainty and a lack of capital deployment perspective than simply cutting because Trump wants you to.
Yeah, it's that about turn that you'd have to do does nothing for your credibility. And what central bankers are desperately trying to do all the time is to maintain that credibility, to say this is master of the universe thing that they get from the crisis, from the financial crisis, is we will look after this, we are in control, which is why 25 basis point cut or hike is okay. 50 starts to look like a bit of a panic moment. And to go from the one to the other very quickly just means you are out of the loop, really. But yes, the more Trump talks about rate cuts, the less he's likely to get them, because the Fed has to maintain the image of independence.
But is the argument the fact that they're not... I mean, I get the whole waiting for data thing, I do. But the data's not been that bad. I mean, we saw the last retail sales print in the US was down 1%, so that was worse than expected. So you're starting to see maybe a few cracks.
Yeah, signs of weakness, I think. But again, it's the inflation element that's bothering them more than anything else. I think if you looked at the employment situation, it's fine and dandy.
Totally fine.
There's no concerns on that front. It's the inflation game they're focused on at the moment.
Inflation's been the same for
Yeah, but they're still worried about what happens next. This is the worrying thing for them, and that's why I think caution is the dominant mode among central bankers. Don't do anything if you can possibly avoid it, really.
Okay, fine. Well, I think that's pretty much all from us just now. We've probably got only about 10 seconds left to go. Any closing remarks that we can share?
Well, markets have reacted quite happily to ceasefire, so there's the momentum, as you say, continues to be to the upside in the short term. And just because it's summer doesn't mean we're not due some kind of correction.
Yeah, but also just be aware that if you're reading articles that suggest that the world is about to fall apart, it's going to give you bias, right? It's going to
zero hedge
play what you see. Yeah, play the game you see, not what you think you see necessarily. There you go.
Very true.
Very true. Cool. Right. Well, we'll be back in a second. Angeline and Elliot are back going to be for the opening bell in just a few moments' time. We'll see you later.
Bye-bye.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, welcome to the show. It is the one, the only Elliot Harris. Hey, here from the Ball Desk. Hey, Elliot.
How you doing? You well?
Yeah, good. Great to have you on board. Just bring up my watch list because all sessions is now on. Let's have a look how it's shaking out.
What are we seeing?
Wow, we are seeing a lot of risk on today. Plug power up more than 5. Actually, it's come down a bit now, 4.5% there. Lots of the crypto-related and quantum computing type names also riding higher there, and hims and hers up more than 2%. Reddit also higher. Do you use Reddit, Elliot?
Very rarely, mainly for DIY jobs and stuff like that.
Look, Elliot's a really dab hand at tools, let me tell you. Right, and on the downside, we have Delta Airlines giving back some of the previous sessions gains, down 2.5% there. And ASML down more than 1%. BioNTech is down 0.75% there. And we are also seeing some movement lower in some of the mining and EV names there. Just quickly checking on Nike, because I think Nike is also all sessions ahead of its earnings. It is currently up 0.4% there. Right, Elliot, it's been such an interesting week. I am so pleased that you are on with us because, you know, we've been talking about, you know, oil markets, indices, you know, gold. So far, the last few sessions, pretty much shrugging off, you know, the tensions in the Middle East.
Completely. So it's been a decent injection of geopolitical risk. There really has. And US equities have not cared one iota. So, pretty much testing the all-time highs again. And implied vol is falling every day. Which I'll come on to in a bit, but yeah. Oil is the only really asset class that's really cared.
Yeah, I've got your chart here, which I'm going to whack up right now.
If you can get that up, and I can talk you through that.
Elliot loves testing my tech capabilities because he sends me a multitude of charts 5 minutes before it goes on.
I like to keep you on your toes, don't you?
Keep me on my toes. You do. Keep me young. Right, here we are.
Right,
here's the screen.
Here. So this is implied vol versus realized vol. Now, a week or so ago, when tensions were at their highest, the spread between IV and RV was about 30 points, which is a 20-year high.
Mm-hmm.
Now, that is completely unwound over the course of this week. So now what we are seeing is RV is significantly over IV. So yeah, the market has just kind of said, okay, all right, the tensions haven't completely gone, but we're significantly happier than what we are. So, okay, the short-term risk is still maybe targeting the top side, but for me, the longer-term risk is more towards the downside again. Yeah, so it's been a real shift in that vol spread. So, what? I guess no huge surprise last week, given what you say that 20% of the world's oil has to pass through the Strait of Hormuz. Yeah. I've probably pronounced that horrendously, but there you go. But yeah, the 1 month vol has collapsed from roughly 70% to now sub 40%. So quite a shift in vol on crude.
Nice. And you know, this really ties in really nicely with what I was showing our trader friends as to what I was using, because they were asking me, Ange, you know, what made you say that you know, oil likely to be lower, and why is Dylan talking about a short when shorting oil when things are heating up after Friday the 13th? I was like, well, have a look at the marine traffic website. Have you used marine traffic before?
Can't say I have, no.
It shows you in real time all the ships that are passing the Straits of Hormuz. It's like an airline tracker. And
there must be thousands.
Yeah, yeah, and like it still looks like a real traffic jam there. So no change, people, until we see that the straits being empty or starting to empty out. Then start to worry. Right. So I've got two other lovely charts from you. Should we move on to equities now? Because vol has been very soft there, hasn't it?
Very soft there, it really has. I would say that RV's probably been the lowest in S&P this calendar year, actually, which, given the political climate that we're in, might come as quite a shock to people. But yeah, as I said at the start, US equities just haven't really cared at all. So if you have but what I will say is that the skew has hit the highest that is seen over the last calendar. In fact, over the last 12 months. Okay, so I do a lot of analysis over 1 month vol, 3 month vol, 6 month vol. You would see that the 3 month put vol is probably one or two points higher than it was pre-Liberation Day on April the 2nd. But where the skew is really pronounced is on the 3 to 6 months, so the longer term contracts. And what this basically means is that, okay, whilst the at the money vol is hitting calendar year lows, the put vol is getting bid up week on week. Now that tells me that, okay, the expected move is reduced, absolutely, but people are still relatively nervous out there. So there's a lot of demand for downside protection, and we're seeing a lot of interest going through on the 3 month and 6 month contracts. Okay, so yes, vol has definitely eased. Yes, vol is very soft, but the downside risk is still lingering there, if you like. So plenty of activity on the put side.
Yeah, and this is really interesting given we are getting close to those tariff deadlines, right?
Absolutely, yeah. What, July 9th, so 2 weeks away, perhaps? Yeah.
Yeah.
Not long.
Not long indeed. Also, give us a sense of, this other chart that I've got here on the S&P 500. I'm going to try and bring it up right now. So here we are. I'm going to zoom in. This is the S&P 500, SPX.
Yeah, so similarly to how I showed you the IV versus the realized vol curve, or vol spread, if you like, on crude, this is the same graph for S&P. You can see the huge spike that we saw during the tariff frenzy in April, and then very aggressively came off second half of April, and that's kind of continued. So, as I said before, S&P RV is trading at calendar lows, 7%. You don't get vol going much lower than that on S&P. So implieds are getting crushed. 1 month vol is around about 15% or thereabouts. But the RV is significantly under that. Okay, so markets are very much stuck in a range / a slow crawl higher. What's the market waiting for? Are they waiting for the start of July? Possibly. Obviously, Fed is a July cut. I think is probably going to come too soon.
They're calling it the Fed Fund futures suggesting September, right?
September, yeah. So 70% implied for a 25% basis cut in September. July, there's only a 25% chance of a cut. So July, I think, will come too soon. September's not a given, but certainly it's, well, if we spoke a month or so ago, I think July was probably 60 or 70% chance of a cut. So they're still playing this waiting game for the data. And as I heard Chris and Luke saying just before, the data's not been that bad. And yes, you may have Trump saying, okay, why can't we have a 1 point cut? And just to put it back again, well, the Fed can't really be seen to be doing that. So they've got to be very careful. They almost need to be sure that the data is sufficiently bad for them to jump, because once they do jump, it's very, 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 very difficult to untangle that. So by the end of the year, they're implying between 50 and 75 basis points worth of cuts. I would certainly be on the lower side of that.
So Elliot, what is it going to be? What is going to actually,
push volatility up? Is it, the outcome of the tariff deadline? Is it, there's now the mood music surrounding a new Fed chief, September, October time? Is it some sort of change in the apparent ceasefire? What is it going to be that's going to nudge volatility higher?
It's certainly in terms of the short-term shock, yes. Anything
because
in the Middle East is
your
obviously
chart.
going to be a
This is
major driver.
incredible, right? We were talking to Matt earlier this week, and it seems like, oh well, missiles lobbed and drones lobbed and buster bunkers. Oh, markets don't seem to care about that. But compare that to the tariff tantrum in April. That was a huge shock.
Yeah. It's very different when it's happening away from US shores. If say that was to be retaliated and land on US shores, there's a very different argument, and you're going to have a very different picture. So yes, very much that's the most likely short-term catalyst, if you like, of any vol. Longer term, something pretty drastic is going to happen, I think, for the Fed to. The market doesn't like uncertainty. Okay, so the market is always going to have its dot plot out. Okay, so that, and we have seen a fair bit of vol actually in that dot plot over the last 12 to 18 months. For that to change, yes, that came as a shock with Trump saying that he's considering appointing Powell's replacement as soon as September, October. Powell's got 11 months to go, and obviously things there haven't been entirely rosy, but Trump's probably not the most difficult person to be falling out with. So usually these things are announced 3 to 4 months and there's a transition period. So that would be quite a divergence. So yes, if someone does get named, does that enable the new incoming person, if you like, replacing Powell, does that allow them to kind of set their own tone and preempt their path? Possibly. I don't think that's likely. Yeah, so in terms of where do we think the market is going to be doing a U-turn in sense of its current risk on appetite, Middle East is going to be the biggest catalyst, but I can't see that happening, to be honest.
Right. Come on my chart, because we're going to have a look at the US dollar as well. One of the key ones I've been watching earlier this week as well. I mean, dollar weakness there. Still, just going to whack that up for you. Still, pretty much persisting, underpinning the price of copper as well and many other commodities. And we're seeing, short covering unwind as well. I mean, is this going to persist for much longer, this in terms of this continued weakness in the dollar?
I think so in the short term, yes. As you said, we did see a little bit of USD short covering back end of last week and over the weekend. But that's been reversed. It's not taken the market much to do a very quick U-turn there. So back to where we were a week or so ago, where the USD's been weak for quite some time now. In terms of FX vol, FX vol's been fair. It's spiked slightly, I would say, this week. But yeah, that's definitely been the generic theme. USD's been weak across the board. I don't really see that changing too much in the short term.
Are we in a situation now where most of the volatility is going to be in indices and oil and gold? Is that where most of the action will be for the next few months?
Definitely less on the index side. Indices, yeah, as will be seen by the complete lack of any reaction, if you like. But gold and oil, definitely. Oil is by far the highest IV out there. It's by far the highest RV. That's where all the action is. We're seeing loads of business on the options, which has been fantastic. Premiums have been smashed, I would say, over the course of this week. For vol to go from 70% to sub 40% in the space of a week is pretty drastic.
Yeah. And that's just checking on gold as well. Just pulling up the weekly options contract there. It's at implied vol at 17.
Yeah, so that's come off somewhat over the last 3 or 4 weeks. That was low 20s. Yes, C and vol is there as well. So yes, gold and oil vol definitely the highest out there, especially the latter. We've seen vols somewhat crushed over the last 10 or 14 days.
Right, so, you know, there's so much on the table. I mean, it's almost like we have a whole year in a week now that's happening. And next 2 weeks is going to be particularly interesting. Of course, we've got, you know, tariff deadlines in sight as well.
Yep.
And deals expected to come as well. What do you expect to come out of those deadlines, you know, if anything, or is it going to be kicked into the long grass again?
Very much in the latter camp. I think this is going to be kicked down the road. All right. Some trade deals are expected to come. India, Vietnam, Switzerland, I think, are close to deals. EU and Japan, it's harder.
Or Trump says, right? Close to deals.
He says, yeah. EU and Japan, it's a lot more tricky. So I think the EU is highly unlikely to reach a trade deal before the July 9th. Are we then going to see the 50% tariffs be imposed and tit for tat EU impose, okay, potential tariffs on 100 billion euros worth of US goods, in which case it's going to get escalated to be de-escalated again. Just deja vu, exactly what happened in April. The market isn't going to react in the same way. That was a crazy 2 weeks, which I don't think we'll see for quite some time again. I think this just gets kicked further down the road. Is he going to come back with another 90 days? It's possible.
Right, and on that note, thank you so much, Elliot. It's been lovely, as always, having you. And I'll catch you on the vol desk a bit later on, just to talk about DIY tools and things. Elliot, Trader Friends, has a really good eye for ladders and brands of ladders. I was very, very impressed, I have to say. Take my hat off. Right.
Many talent.
Thank you. Thank you very much. And don't go away, Trader Friends, because we have a special treat for you after this. For those of you that watch Trading Experiences, we've got Gabriel Nausbaum. I'm hoping I got that surname right, but he's going to be talking about, you know, how he started his trading journey. Yes. On Trading Experiences with Rich right after this.
Welcome back to Trade Live with IG. So, our next guest has mastered the art of making social media real, relatable, seriously impactful, and gives financial insights into mindset gems. Gabriel Nausbaum, how are you doing, sir?
I am doing well. I'm very excited to be here today.
It is really good to have you in. This is a big jump for us. Because I think TikTok, you have 1.3 million followers.
That is correct, yes.
Does that just blow your mind every morning?
I try and ignore it as much as possible because it's probably more of a scary thing than an exciting thing every day to know that many people are watching and listening to things that I say about money.
Absolutely. And so it's taken you to the Bank of England. It's taken you to 10 Downing Street. Has there been a moment along the journey where there was a real, you know, you can say, well, this is when it changed forever?
There's been a lot of moments along the journey that are incredibly memorable. I suppose your first viral moment on the internet is one to remember.
What was that?
My first viral moment was talking about lifetime ISAs. Quite a nice, relevant topic, something that I think needs a little bit of a change, and maybe we can dive into that. But that was the first moment that I think a lot of people learnt about the ISA product, probably through social media on TikTok. It wasn't a platform built for education, but it's a platform that I've used education for. So that was a big moment. And then I guess first hate comments, being called Wallace from Wallace and Gromit. That was a lovely moment.
Where did they get that from?
No idea. And then probably a handshake with Keir Starmer is a pretty memorable one as well. I mean, some people might hate.
Bad?
I'll leave that to everyone watching.
But really, it's amazing how, tell us how it first started, because where you are now, the actual story of how everything started is really interesting.
Yeah, so I was working at Barclays on a graduate scheme, commercial banking, so really nothing to do with the world of personal finance. I'm not sure there are many careers that are very similar to the world of personal finance. And I, just as a weird guy, thought it would be fun to start a hobby creating financial education on the internet, because it was a topic I was passionate about. I was teaching in my own little circles. It was the thing I was reading about. And everything I know is self-taught. There's no qualifications behind it, which some people might be like, oh, okay, let's not watch this guy anymore. But for me, that adds an element of trust and authenticity behind my journey, because I'm not telling anyone what to do. I'm just teaching as I go. So yeah, I was building this up side by side while starting a career for myself. And very quickly, one overtook the other in terms of what I really wanted to do for the rest of my life, and that was to become a financial educator.
Yeah. And so how long ago was that then, when were you at Barclays?
So we're talking almost 5 years ago to the day I started. COVID, a classic COVID one. I started my career during COVID, which means I didn't meet an employee for about a year, another employee.
Wow. So yeah, you can understand why you ended up, going down the online route then.
Talking to myself and going crazy on the internet. Yeah, absolutely makes sense.
You touch on that. Your videos they go so popular and viral because it's you speaking to yourself, and it's almost like good cop, bad cop, devil on one shoulder, angel on the other. And I think that's what's so compelling about watching, because everybody's having these discussions to themselves anyway.
Yeah, it would be great, honestly, if I could bring in another human being into my studio and have a conversation with them. But until I have hired that person, I create these conversations, like you said, between two characters often. I just think it's a really engaging way to have like that look over my shoulder approach to personal finance. You have one character questioning something or not aware of a topic, and the other character can either explain it or challenge it. And this kind of dialogue does a really nice job of both giving you an end result, a lesson at the end of the day. But on top of that, it has the entertainment value, which is really important when you're trying to teach, especially a younger generation, which my demographic are, which is normally 18 to 30-year-olds. Okay. You kind of need to trick them into learning a little bit. So that's why I add the entertainment into it as well.
Yeah. And then you share a lot of yourself personally, because it is that real situation. We spoke about rent the other day. Oh, well. But, how do you balance that sort of vulnerability, but then also have the boundaries as well?
It's tricky. It's something that I'm learning every day. I've definitely overshared a lot about my own personal finance, whereas I suppose, opposite of that, which I also believe in, is that I like oversharing. I think that personal finance is a topic we all know it's not taught enough in any level of education.
That's it.
But on top of that, the conversations in this country in particular are so limited. It's so taboo. If you look at like levels of different topics of conversations that people are comfortable having or not comfortable having, money quite often tops that list as the most uncomfortable topic. So even though I know logically that I want to be as open as possible and be able to share anything and everything, it doesn't mean that I haven't still grown up inside of a society that closes that down. So I'm caught in that kind of two minds and two different personalities.
Yeah, but it is becoming much more the way, isn't it? We know that Mia shares her running total of her investment portfolio. Yes. Laura's got a target that she really strides towards. So I do think it's becoming more common. And how is that received? Because you do these, is it Vox Pops they're called?
Yeah, I mean, it's received brilliantly because at the end of the day, people are so nosy. Like, they love knowing actual numbers behind what's going on.
Yeah.
So I do try and share as much of it as possible, because at the end of the day, even just sharing, a salary that you're currently earning, or you did earn a period of your life, which is often a question that you said with the Vox Pops that I ask people to try and share.
Yeah.
If you're sharing a savings amount that you've got stored away, if you're sharing a goal that you're trying to hit, when you put numbers to a topic, it starts to make things a bit more realistic, because someone else can start to see, okay, I didn't realize that, the threshold was actually quite lower than I thought, or I'm actually a bit further away than I thought. I need to maybe ramp things up a little bit. But until you bring actual numbers into it, it's very hard. So when I speak to people in the street and I push them to try and give me some numbers behind the information they're sharing with me. So like, for example, a salary, it's a 50-50 uptake whether people are comfortable sharing it or not. Yeah. But I think once they do, like, the engagement shoots up, because people are like, I didn't realize that you could earn that much in that kind of career, or that's the average salary in the UK, or someone is surviving in London earning less than 40k. How is that even possible?
I had that conversation with a young lady who was starting out in a estate agency, and I think her salary was 23,000. And I made the mistake of asking, God, how do you survive on that in London? And it was a genuine question. It didn't go down well.
No. it doesn't go down well at all. But the reason why I put that 40k number in a second ago was because when I asked most people how much do you think you need to live in London, the responses are probably start from 70 and go upwards for a single person. And I'm talking a comfortable lifestyle, of course.
That's it.
But there are numerous occasions where someone says, yeah, I'm in the mid-20s, late 20s, early 30s in terms of my salary. And this is how I do it. And to hear the start to like practical solutions and like things that they're doing to solve it doesn't mean it's easy.
No.
But it's a great eye-opener for someone that does strive to maybe move to this area of the country.
And, people generally, do you find they're striving towards investing, towards the, you help a lot of people with their ISA understanding. Is investing the goal, or are we still way off?
Investing is becoming a lot more popular. It really is, especially in young age groups. The biggest issue right now is misinformation with investing. So I think there's huge research to show that the 18 to 30 is one of the biggest ever age ranges in terms of what percentage of them are currently investing in some way, shape or form.
Yeah.
But that doesn't mean they're necessarily putting it in the right place, because the internet is flooded with misinformation. You also ask them, where are they getting that information to learn about this topic? And the answer most commonly is the internet, social media, maybe through people like myself. So whilst, yes, it is becoming hugely more popular, which I'm a huge advocate for, so are the government, with a lot of plans that they're trying to do and stuff like that, whether they work or not is another topic of conversation. And I think overall it is a good thing. The biggest issue right now is lack of access to accurate and positive information, rather than people that are trying to take advantage of this young, maybe slightly naive age group that don't have the right intentions or aren't aware of what certain tools and products should be used for.
Yeah, I mean, not to put it out there, but the Dubai crew, we've all seen the Lamborghinis and the high living, and that's the stuff that's, it's so good to see people like yourself and the ladies that I mentioned coming through, and really from a genuine educational view. That has taken you to speak to the government and the Bank of England. What kind of conversations go on at that level?
I think it's an education place still for them. Both of those organisations are obviously historical organisations. Bank of England, one of the oldest institutes in the country. The government. But they're both having this play where they realise they cannot access the young generation anymore. They are really struggling through their traditional, I suppose, assets and media. And they look at us as the new wave of being able to communicate things to, again, this younger generation.
The masses.
To the masses, exactly. I suppose the important part for us as people who have that level of authority or maybe influence on the audience that are watching us is that we're not there to be mouthpieces. We're there to digest information they're sharing with us and then translate it in our own language with our own opinions attached to it.
Absolutely.
Because I think the issue that you see with a lot of mainstream media is that they will repeat word for word, verbatim, what is being said. Now, they're doing that not because they're puppets or anything like that. That's their job, right? To report, to say what happened. But if you're watching that as an everyday person, you're probably thinking, I've got no idea what that means. I've got no idea. You're still using technical language on the news. Whereas I will come in and say, an ISA is, and actually explain what an ISA product is before I then go in to explain the changes that have been made to it. And automatically that switches someone on. So I think that if we look at the percentage again of people that are probably now aware of what an ISA product is for the first time, this is the change that we're trying to make. And I think that's what the government and the Bank of England have latched onto. They are aware that this is the change that needs to take place, because ultimately it's where the attention is.
Yeah, and it's that really nice path into investing, right? The stocks and shares ISA is just, it's such a nice first step, right? Don't open a stocks and shares account. Don't open a trading account until you've got that level of confidence. But that can really start with the ISA, can't it?
The ISA product is amazing. Not quite sure why it's being tinkered with at the moment, or potentially tinkered with.
Well, that's interesting, isn't it? Because it's from my point of view, what's the point in a cash ISA, right? Because investing has outperformed by so much, but it really needs people like yourself to help educate the nation on what's safe, what's not.
Well, it's exactly what you said. It's an education play. Whereas I think that the current rumours about the reduction of the allowance for the cash ISA isn't an education play. It's kind of like a force play. Yeah. And I don't think you change a nation's habits through rule changes. You change it through education. So if I'm someone that's saving through the cash ISA product, whether we think there's a use for it or not a use for it, let's say that someone is using it regardless, and they get told all of a sudden that they can't put in above a certain amount into that. I understand the logic. Don't get me wrong. I really do understand the logic because you're shifting people. Maybe they're looking, okay, what other ISA products are. But I think psychologically, if I've got no information or education on an investing product, what I'm going to do is I'm going to shift my savings into non-tax incentivized saving accounts. And the government, okay, sure, they will raise more tax through that because people will start to go over, the tax saving thresholds. But will you see this huge shift into the world of investing? I'm really not so sure. I think it's an education play, and it's a change in the language that's used around investing products within this country. Currently, whenever you talk about it, and again, I understand why, but it's capital at risk. Your
the scary 3 words.
Your capital might go down as well as up. Risk, warning, risk, warning. Yeah. And I do appreciate why that is, because all of those statements hold true. It just doesn't do any favors to someone who's thinking, oh, maybe I'll get into it. Oh, they see that risk. Yeah, you know what? Like, I don't want to take any risks. Whereas if you start to explain how to mitigate risk or reduce risk, that is a much more, I think, appropriate way to shift people over into this new world of investing.
I guess it is part of the responsibility of the companies as well, isn't it? It's saying, right, we realise that you might not have the availability of the cash ISA anymore or greatly reduced. But if you open the stocks and shares ISA, we'll pay you the interest rate that you would have got on the cash ISA anyway. So the fact that companies are moving towards that at least softens the blow. But do you have conversations with the FCA around, but I guess they're more the regulator rather than the educator.
They are definitely the regulator, and I think they are currently working with big institutions to help, in a way, push towards the world of investing. I mean, investing has been democratized like crazy over the past decade.
Wow.
And so I think that's why there's this huge play for everyday people that can get into investing. It's not like you need to call up your broker anymore and put in an order, right? You can click on a few buttons and you've invested in any company or any fund in the world at some of the cheapest prices.
Yeah.
So the FCA are I think they are definitely working this behind the background. But in terms of working with someone like myself, I mean, you see last week the report going out about a couple of arrests in the UK on influencers,
right?
A huge number, dozens and dozens of cease and desist letters going out. And I think what they're targeting are what you call the Dubai people.
Yeah.
The people that are being flashy, trying to push people into high-risk products with very little warning and stuff like that.
Okay.
So the FCA are definitely focused more on that area of the social media world, which is good. Obviously, it's great to get bad people off the internet. What I really want and what I'm really pushing for is to open up conversations with this new wave of, I suppose, good players in the game, people that are really trying to impact and make a difference. And often when you do hear them talk about us, it's in a very short sentence and they lump us in with financial advisors and qualified people. But there are this new era on social media of journalists, essentially.
Yep.
Think about someone like Martin Lewis, not a qualified financial advisor in any way, shape, or form, a financial journalist. And we're kind of in the same bracket, but I think there's that gap there. The conversation hasn't really been open between the FCA and this kind of new wave of people on social media.
Yeah.
And I think it would be a really useful conversation because I think we both have the same intentions.
That's it.
But we need to support each other rather than whilst keep going after the bad people, but lift up the good.
You need the clarity on where the line is.
Yeah, I mean, there's a lot of guidelines out there, and I get nowhere near to the line. I intentionally have been trained on that. I know how to do that a little bit. But there are new people that are starting up that have real good intentions that need to be taught that from the start. And I think, there's a lot of things that need to be done over, I suppose, the next couple of years because the landscape is changing so quickly.
Now, so let's go back to the sort of technicalities. Okay, so where does the idea? Let's take an investment.
Mm-hmm.
Where do you get that idea from, and then how quickly does it become a video?
My ideas come from all different places. So I'm keeping an eye on the economy the whole time, the little changes that I can share. Hot and trending topics often come into play, and I will try and latch an idea. But a lot of the concepts that I make come from my own real life experiences, because I'm constantly interacting with money on a hourly, secondly basis. So a lot of these things, like from interactions with my friends, conversations with my partner, all that area hugely influences what I'm doing. Whenever I look at my investing portfolio and I make a decision or something like that, I will immediately go, well, how can I teach that within a lesson? So if we're talking about specifically investing, you know, you get around the April area, you know, ISA allowance, renews and all that kind of stuff. And it's a brilliant time to go out and create content about, well, how to invest from scratch again, you know, how to, your ISA allowance is renewing, that element of urgency, but not really urgency or panic or anything like that. It's when people are getting more interested. Around the January area where people start to set New Year's resolutions. And they start to think, okay, you know what, this is the year that I start investing. Again, it's a great period of time in my head where I'm like, okay, I'm resetting all of my things a little bit, my financial goals, my budgets, etc. Let me create content around that. And that's the investing side of things, I suppose, or whenever I get a question from my audience, because there's huge interaction. Social media isn't a one-way conversation, it's a two-way conversation.
How do you keep up with all the comments?
I don't.
It must be impossible.
I really don't. But when there's a good one, it will come through, and I will often try and respond to that comment in the most appropriate way possible. So I'm trying to think of an example. Often I'll get asked, well, what platform do you want to invest on? And my response quite often is, just start. Literally, just start. I think people overthink a lot of this stuff.
Because it can be quite intimidating.
Yeah, because when someone asks that question, the comments start to go with floods of different names. Start here, this reason, that reason, that reason. And so many platforms are suitable for so many different people for different reasons. But I still think that it's better to get started on the wrong platform, theoretically, as long as, you know, FCA approved, FSCS protected, all that kind of stuff. But to get started on the wrong platform than to have that kind of procrastination that stops you from getting started full stop. Because one of the best and quickest lessons I ever learned was putting some skin in the game is the quickest way to learn.
That's it, because you're focused and you really, you soon learn your lessons on a small amount.
It's exactly how I learned, right? Put something in, something that I was willing to completely lose. So I was aware of all of the risks around it. And it forced me to start learning. And I think that's probably done more for my education than any video course book that I've ever read.
There's a lot of our viewers, you know, mums and dads, a lot of the kids are studying for exams right now. But if you were going to say, you know, give one principle or one habit for a new beginner with even £100, what do you think is the best habit to adopt early?
Specifically with investing?
Yeah.
I think that one of the best habits is to just kind of start small. Because often people think there's a lot of reasons why people don't get into it. And one of the biggest ones is I don't earn enough or I don't have enough. But the truth is, like we said, the barriers to entry are being eroded so quickly that there isn't a huge amount that you need to start with anymore. So if I was to say, like, to build one habit, one muscle, it's just to start small, start where you're comfortable with, and then adapt and learn from there. And then I suppose if you can allow me like two, so I can do a bit of habit stacking.
Go on.
Is once you have started with that really small amount, something insignificant that you've kind of testing out to get the feel for it, bring in the education play. I don't care where you get it from. If it's a book that you want to start reading, if you want to start watching this show every single day, if you want to go on YouTube and just start watching your favorite content creator who's talking about the topic. I think if you just do one small thing once a week, 10 minutes of your time, we speak about compound interest in investing, right?
Yeah.
The compound interest in education stacks up in exactly the same way.
I've never heard that before. I like that a lot.
Everything in life compounds, right?
Yeah.
So the education play is just as strong as the investing play.
Right, so how do people find you if they have enjoyed this interview? And
I like that, a big if, right? If people have enjoyed. If you hate me, feel free to find me, hunt me down, and let me know.
Right, I'm sure we got some comments in the. But there you go on the TikTok. So as we said, that money guy, Gabriel. Nussbaum.
Yeah, Gabriel, that money guy. If you search that on all social media platforms, you'll find this beautiful non-Wallace looking face talking about finance in all ranges of topics and anything that interests me.
And so you must have been in early to get that title then.
Get that money guy.
Yeah.
Yeah. Someone said you should have gone with the money guy. It's too late now, isn't it?
No, like I think that's that money guy.
Well, that's where it came from. I was walking past someone and they were like, "Oh, you're that money guy on the internet, right?" And I was like, "That's got a ring."
Go on, to finish off, give us one of the funniest interactions you've had with a fan.
Oh, it's a fan or not a fan. I am horribly uncomfortable when people come up to me in the street, but I have to act very comfortable and all that kind of stuff. Yeah. But I think I was just on a plane going on holiday, and literally, like in front of me in the road, someone literally turns around and goes, "I really like your stuff." And I was like, "That's great." And then they proceed to sit next to me on a 4-hour flight, and I was just sitting there thinking they've come up to me, a stranger, saying they know me. Let's get the headphones in nice and quickly and just maybe pretend to fall asleep, because I was like, it's great when someone comes up to you and it's a quick 10-second interaction.
Yeah, of course.
4 hours is a little bit different.
Good stuff, right? Thank you so much. That's really been interesting stuff. And any big aspirations? So you've already done Keir Starmer. You've been there for Andrew Bailey.
Yeah.
What's the next?
What, DJT? The big DJT off in the US? Maybe I'll have a conversation with him one day. No, I think the goal for me would be if there was some level of formal education compulsory in the UK. None of this maths A-level enforced on kids until they're 18 or anything like that. Real financial education starting from, I don't care what age, 5, 10, 15, 20 when you leave school and university. If I saw something compulsory going into people's lives in the next half decade, I think that would be one of the biggest successes that I think I can make. Basically make me irrelevant. I'm more than happy for that to happen.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
How do hedge funds use this right now? Kind of what evidence do we have? And we have, so hedge funds that are using AI to actually trade, according to the SEC, so this is data from last year, believe they're outperforming their peers that are not by 12%. So you're taking out all of that human risk. So there's a 12% potential alpha there. That's according to the SEC. I think a lot of people are using it for risk management more than everything else.
100%.
So not necessarily just for idea generation, but dumping your portfolio into it and saying, where's my blind spots? So Deloitte ran some analysis last year, say that funds that are using AI for risk assessment have reduced their portfolio drawdowns by 15% on a year-to-year basis.
Oh, really?
15%, according to Deloitte,
massive.
Which is huge. You know, it's if you can say top to bottom, you know, I'm expecting to return 8 to 10% on my portfolio this year because of reasons A, B, C. But now instead of having a 20% drawdown, 15% and 20%, you know, you're going to now only get a 17.5% drawdown. That's material. That's material. And you're seeing this stuff happen in real time.
Yeah, and I was listening to a podcast with Nikolai Tangen, who is running the Norwegian Sovereign Wealth Fund.
Okay.
So he's managing the world's largest fund. They got a couple of cheeky trillions there. Just a few. But what he was talking about is that the one thing that they spend the most amount of time on is, first, of course, they look at sort of what stocks to buy, but they've sort of done that research already. Now they have their portfolios. They're not going to trade in and out, which is, you know, as you do, if on your ISA or whatnot, you're not trading in and out of your ISA. But what they spend the majority of the time on is risk modeling, scenario analysis. If X happens, what will happen with my portfolio? And if Y happens, et cetera, et cetera, et cetera. And that is something that, you know, these guys can use. So like you say, you input your portfolio, just copy paste it in, and you say, if the interest rates goes up to 5%, how will that happen? So you can get that sort of these guys obviously they have the most advanced, computer systems. They have whole teams working on this. But you as a regular trader can get this into yourself as well, just inputting it correctly.
Yeah, completely. This is obviously coming out live on the Trade Live with RG show at the same time. And the question we have here is, if the EV was spun out of Tesla, what would the share price be? Is it being held back? Pop it into Perplexity, or Ronnie, have you done that?
I've done that already.
Okay,
so I prompted Perplexity. If the EV business of Tesla was spun out, what would the share price be? So if Tesla's EV business was spun out as a separate entity, the estimated share price would be significantly lower than Tesla's current overall stock price, reflecting the value attributed solely to the automotive segment.
So what's it saying?
So Tesla's total market cap is approximately 1.1 trillion, with about 3.22 billion shares outstanding. So they're saying that the EV business is valued at $75 per share.
So EV $75 a share, and the stock's trading $3.45.
Exactly.
There you go.
So,
look, and that's not kind of hard, fast facts. This is IG endorsing the research, but it's fascinating that you can get that level of clarity with a simple question.
And then you might wonder, oh, where did it get this information from? Well, then it gives Morgan Stanley breaks down their 410 price target into 5 segments, with $75 per share assigned to EV business, $160 to in-car software, $90 to robotaxi, $67 to energy storage, and $17 as to Tesla as a supplier. Boom. Question answered, mate.
Straight in there. Look, we've run through some examples here, but I think the core comparisons to hedge funds, an individual trading and investing has the benefit historically of just a search engine, or the publicly available kind of research notes, but you're going to get them way slower than the market does. They become free after, I think, a fortnight, and they find them really difficult to get hold of. So what can you now do that you weren't able to do before? Right, you can generate signals, okay? You can get ideas sent to you based on your history. Research. You can use these tools to be your research analyst, okay? No more, this is my quant. Perplexity is your quant. None of that. You can optimize your portfolio. You can monitor your movements on a daily basis. And then you can try and use it to come up with new ideas based on what you've been using.
Yeah.
It's fantastic. I mean, some of the prompts that in our research shown that obviously we use Perplexity and Claude to help us prepare for this show. A hedge fund would say something like, generate me a mean reversion strategy with the last 5 years of S&P data, and I don't want to spend any more than 10% of my transaction costs. That's a strong prompt.
Yeah.
You could say, here's my watch list, back test every time these stocks have been oversold on an RSI basis, buy 100 shares and just see how that takes you. We've already looked at how you can use it to simulate drawdowns under a 2008 style crisis or another Liberation Day scenario. Or you could say, how will my current positions perform in a 20% sell-off? And actually, how can I then hedge? So we've spoken at length on this show about using options as a diversifier. If you can figure out, this was a good one from yesterday. The person whose portfolio we were kind of using as a bit of an idea, we were asking, what do you think a portfolio is currently correlated to? So if he was using options, how would you hedge? Okay. So you could dump your positions in, you get your portfolio. What is my correlation to the FTSE 100 or the FTSE 250 or the S&P?
Yeah.
You can look at the correlation so you know exactly how much you need to hedge. Let's say you got £100,000 worth of portfolio. You might think, I'm going to go and trade a hedge. I might sell £100,000 worth of FTSE to go delta neutral. But what if you're in Barclays, in AstraZeneca, in Rio Tinto, and then you've got Alphabet and Tesla? That's your portfolio. Well, you're not really correlated to the FTSE, so it's not a clean hedge.
No, exactly.
You've got a little bit of tech in there. It's not going to be quite perfect. Get the robot to tell you what to do. Find out how correlated your positions are in real time to the market, and then work backwards to say, I need to trade gold as a diversifier, or I want to put some put options in this particular size, knowing what the delta is, knowing what your portfolio size is and the correlation.
Yeah, and you can also sort of take a step back. So, right, you're saying how the hedge funds were using it. They were using this sort of moving averages and all these other indicators to compare and contrast their portfolio. If you don't know, you can also take a step back. If you don't know which indicators to use, and you can just simply say, I want to analyze my portfolio. I want to look at risk. I want to look at sort of how it moves in relation to market volume and anything else that you might be interested in. And then you say, which indicators should I look at? And then it'll tell you, look at RSI, moving averages, etc. And then once you have that information, you then go on, okay, thank you. With the prompts with the indicators that you gave me, can you please analyze my portfolio in relation to them and model how the risk of it looks like? So what I'm trying to say here is that don't put in one prompt and say, it didn't answer my question, I'm done. You know, it's a conversation back and forth.
Yeah.
When you're speaking to your colleagues or whatnot, it's very rare that you just say one thing. I mean, obviously, when you ask me to do something, I understand it straight away. I just go straight for it. No need for me to clarify. But, you know, when you're speaking to an AI or something, it's a conversation, right? It's a dialogue and not a monologue. So work with it, make it your best friend, and it will give you all the information that you need.
Yeah, I think if we were going to give some kind of takeaways, it's start using it now, right? Yeah. This will become, and we were having debates about how this is going to impact things like education, right? Why sit a course when you can get the research at your fingertips? Like, there's a whole load of conversations you can have. Of course, we've been talking a lot on the show about video and compute and what the demand is. Forget about that for a second. What can you actually do? So, you know, we're not endorsed by Perplexity, we're not endorsed by Claude or anything like this, but accounts are free.
Yeah.
For both of these things. They do have pro versions where you can get access to more data. Things get ring fenced. You can be more secure with your own data. But just sign up. You know, in terms of benefits, you know, you're getting, with a little bit of inspiration, institutional grade information, quality, proactivity, because this thing is coming to you, not necessarily you having to go to it. And, you know, I genuinely think there's an edge in this. You know, I genuinely
100%.
think if we can help set up a community via this show and via this podcast where we're sharing best practices, you know, if someone comes up with an amazing prompt that's really helped them, share it with us, please. You know, jump on the chat, give us an email. You know, it's something that we are constantly using and constantly learning. Yeah, it's really changed. It's really changed the way that we work.
Yeah, and it needs, I mean, patience is the name of the game here, right? Yes, it's super quick. Yes, it's AI, it knows everything. But, I mean, you and I have been plugging away with AI tools for 2 years now, but we're still learning new stuff. We're still trying new stuff every single day. So my one piece of advice would be to be patient, learn from it, and then try to perfect everything and just continue. Like anything else in life, it takes training, because you talk about edge. Everyone is using AI nowadays. You know, everyone is using it, everyone is adopting it, but it's how you use it and how you utilize it. That's where your edge comes in.
Yeah, yeah. I think as well, you've got to look at, you know, what is your metric of success with this?
Yeah.
Right. If we're talking about, you know, giving the correct prompts, you've got to give yourself the ability to learn and get trained. You know, let's say, for example, you're a parent and you're racing around trying to look after your kids. You've got to go do the school drop off. You've got to come back. You've got to pick them up. Let's say you've never been able to keep a trading journal because you've just never had the time to.
Yeah.
With this, you know, you could in theory bring the amount of time down from keeping a trading journal from, I don't know, an hour, maybe a couple of hours a week, maybe not, you haven't even got that amount of time to do it, to seconds. Because you can go onto the IG platform, you go to the history, you can download it as a CSV file, you can dump it into a Claude, and you can say, right, challenge me on XYZ. I felt nervous today when I was placing this DAX short. Why? And then it can come back to you, and it can be your psychological help as well. So you can use this as your coach. So I would say, you know, instant benefit, time saved.
Yeah.
Forget all the quality of information, but instant is time saved. Then you've got just the improved ability to make decisions. You know, if you've got your eyes wide open and you've got Axel sat on your shoulder, instead of just saying, right, I want to be short the market because of reasons ABC, you could give it a screenshot of your chart setup. You can take a look at it and say, actually, there's three green candles in a row. That's not the most optimal setup, but I traded here. What would you improve? Well, wait for a pullback candle and then trade on the pullback candle. Maybe the entry was just not optimal, so you can get your decision making improved. And then it's risk management. If you look at your portfolio and you run a scenario on it, that if the market drops by X, you're going to get margin called, run that stress test through this. Because if you don't have that preparation in place now, because platforms don't do it for you, I wish we had a stress test button on the IG platform. There's a scenario backtesting piece on the Tasty platform, but not on our platform. You could go in there and you could put it in, you can stress test it. And so if you're over leveraged in the wrong sector, or if you are trading, say, a Palantir, that if the S&P is down 2, this is going to be down 10, right? Because of the volatility on it. Well, actually, maybe I'll take a little bit out of that stock. It's too volatile for me. I'll put it into something else.
Exactly. And I think that's really hit the nail on the head there. It's, one thing that you save a lot of time in your in your trading journal, etc. However, when you write down, even if you write down, let's say you do a trading journal every day. Every trade that you do, you write in, I did this because of that, and etc. And this is how I felt. Great, you have that information, but what do you do with it? Prompting this into the AI allows the AI to give you insight and hidden nuances and analyze everything over a longer period of time.
Yeah.
And like you said earlier as well, continuously prompting it will allow it to reflect and sort of analyze the entire data over a longer period. So you can perform sort of regression analysis on your results, depending on. So when I do this, you get this result.
Yeah.
So that's what it's used for, in my opinion, to sort of get that insight that you couldn't get yourself.
You say regression analysis?
You can do a regression analysis on it.
I haven't done a regression analysis since my degree.
Oh, me neither, but
you can do it.
Yeah, exactly. Yeah. So if I sleep bad, you can do a regression analysis on your sleep to your performance that day.
Yeah.
So if sleep is -2, then performance will be. You can do a regression analysis.
This is all the finance stuff. But I mean, I've used it to analyze my diet. I've used it to analyze and create me a gym plan. I've used it to help me plan holidays and travel and tell me where I could go if I've got a 2-week window and I want to go and travel around Europe. Where could I go? The possibilities really are endless. For an individual trader that is, has a day job, is on the commute, if you haven't got someone there being critical to you, how can you suspect that you're going to perform, on a long run basis?
Yeah, that's every prompt that I do. So whenever I prompt something and ask it to analyze something, or I give an opinion, I always say sort of, don't tell me what I want to hear, tell me what I need to hear.
Yeah.
And sort of having that prompt, it allows it to sort of tell you, okay, you look at this, but you missed this section of it. Why didn't you sort of take that into consideration for the next time going forward?
I think the big point here is the applications are kind of endless, right? And I don't want to just speak in superlatives, but what we're seeing is, I don't think through the clients I've spoken to that the adoption of AI to help themselves as a trader's coach, co-pilot, portfolio manager, analyst,
yeah,
I just don't think people are doing it yet.
No.
Because the thing I struggle with this the most is you've been given a chatbot, right? Everybody knows ChatGPT. We purposefully not talked about ChatGPT today because it's the most popular, it's the most well thought of. But Perplexity can use ChatGPT's models. It can use Anthropic's models. It can use DeepSeek, the Chinese AI. It's got access to all of those different things, so it sits on top of it. But it's knowing what to do.
Exactly.
I'm all for being creative and inspiration, gathering inspiration, but I need to be personally inspired because I don't know what to look for if I don't know what to look for.
Exactly.
So you've been given one of our old sales coaches. He says, right, here's a badge, here's a gun, you're now the sheriff, but you don't know how to police, right? So you don't know what you don't know. So hopefully we're going to call this like an introduction to AI as a way to start people thinking and getting their brain moving about, oh, actually, stuff that previously wasn't accessible for me is for free, or at the very least, 95% cheaper than a Bloomberg or a Reuters terminal that supposedly the big boys use.
Yeah. Okay, look, I'm new to the AI game. I'm a trader. Where should I start and how should I start to get going with this?
So I'd go, if I was going to take one thing away from this, it is build a watch list would be my first point of call. That's the gateway drug, right? It is, I've read in the news about this week, the MOD defense spending review. Just this week, Keir Starmer announced that there was going to be an uptick in spending. What should I look at investing in? Right, and you maybe names like Babcock and BAE Systems, you know, they're kind of blue chip names to people that are in the markets that have done this. But if I'm completely new, I think I've seen an opportunity here. The UK government are going to spend more money on defence. How can I benefit from that? Right, well, you know, hi Perplexity. I'm a UK investor. I want exposure to stocks that will benefit from the recent UK. Are you typing this out in real time?
Yeah.
You're typing it in real time. I want to benefit from stocks that will take some of this cash and I want to invest it in my 20,000 ISA allowance this year. How would you do it?
Okay.
So add another layer to it.
Okay. So the second question is to follow up.
Yeah. How could I allocate my £20,000 ISA allowance? Silence, please.
I have a 20k ISA allowance to allocate.
Any moment now. Magic of TV.
All right. So the first question was, Keir Starmer said there would be an uptick in UK defence spending. Which FTSE companies should I add to my watch list to benefit from the increased UK defence spending?
Mm-hmm.
It gave us BAE Systems, Rolls-Royce, Babcock International, Kinetic, never heard of them.
Yep.
Serco Group, and then these are stocks that some of these I hadn't heard of. And then I said, to follow up, I have 20k ISA allowance, split it up for me. Sorry, to clarify, split up the ISA allowance in UK defense.
So you're trying to get it now to be your portfolio manager.
Exactly.
And is this Perplexity or Claude?
I'm using Perplexity.
Okay.
So it gives me BAE Systems, 7,000. Largest UK with a rationale behind it as well. So it gives me investment allocation rationale. BAE Systems, largest UK defense contract with diverse exposure to major UK and global defense program. Strong growth potential from submarine, munitions and cyber investments. 5,000 in Rolls-Royce, key supplier of jet engines and military aircraft and naval vessels. Babcock International, 3,000, specialist in fleet management, submarine support and aerospace services. Kinetic, 1,500, provides advanced military technology services, including cybersecurity and risk evaluation. 1,500 in Serco Group, and then 2,000 in defense-focused ETF. Example given, Global X Defense Tech uses ETF. Any follow-up questions?
I want to wrap this up soon. Let's just say, if the FTSE fell 5%, what would the value of my portfolio change by?
Oh, that's a good one.
And of course, this is a not investment advice podcast. So do your own research. This is not us telling you to allocate to this, but it's just an example of how you can use the technology.
If the FTSE 100 index fell by 5%, the approximate value of your 20k index defense stock would drop proportionally by about 5%, assuming your portfolio moves in line with the index.
No,
that was not good.
No.
We're not happy with this.
No, not happy. We want to know the correlation. Back to the drawing board.
Yeah.
But this is the point. You know, it's not going to be gospel by any stretch of the imagination.
No, and that's what we're saying, right? Don't take the first best answer, plug it back in and back again, and then eventually you'll get the sort of answer that you're looking for. So yeah, it gives me that the correlation is roughly in the range of 0.5 to 0.7 between UK major defense stocks and the FTSE 100.
Okay, so it's less. It's if it's a correlation of less than 1, I would expect it to move by less.
Exactly. So meaning about 50 to 70% of the movement in the defense stocks aligns with the FTSE 100.
So if FTSE falls by 5, this is going to move by 4.
Exactly.
Interesting. Right. Let's wrap it up there. This is just a taste, and I think we will come back to these conversations again and again and again as we learn more. There are people in IG that are brilliant with AI. They weren't available to speak today, but we're definitely going to bring more guests in as this kind of conversation grows. But if you get any cool prompts, bring it to the community, bring it to the chat. If there are cool use cases you find, let's share this information, because I think if we bring up everybody with us, hopefully we'll all make a little bit more money along the way. Cool.
Thank you very much, mate.
Good to have you. Cheers, Nick. Thanks for coming. Guys, thank you so much. We'll see you next time. This has been Talking Shop. Please like, please subscribe, please share it with a friend if you think it's been a useful conversation. And critique us, please. If there's things that you think we should talk about, things we've missed, we probably went on a little bit too long with the demonstration at the end there, but we can learn from it. Yeah, just let us know. Thank you.
Here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! I know Eliminate! You were on Eliminate! Oh my god!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
Did you get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's that woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned around to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custard and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can, because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old. But our primary pleasure was smoking pot. Because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like man work, and you got to grill. We got to drill the hole.
Tony is going to counter that and say it's all about catching the fish, for sure.
No, I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing, just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed the most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean, I
Ladies and gentlemen, we are back. This is Overtime. Your eyes do not deceive you. This is a whole other thing that we're about to do here. Dylan Radigan is entertaining Tom in Milan, as best I can surmise, and Chris is in a heat wave trying to figure out why his house is 110 degrees on the inside. So these fine gentlemen are joining me. I'm Ilias Pivac from San Francisco. That's Mr. Mike Butler and Thomas Westwater from Chicago. Gentlemen, how goes it?
We're nice and cool in here. So, I was trying to walk Chris through his AC problem, but, can't handle the heat. So,
yeah, 110 is that is rough. That is rough.
Yeah. Inside one's house at 110, I'm not sure I'd have anything cogent to say about market action either.
No. And I just checked to see if there's a Mets game right now, but there's not. It's in 2 hours. So he's not there. He's not lying. He is fixing his AC.
Fingers crossed he can actually make it inside his house and see any of it at temperature below melting.
That's insane. Yeah. Stay safe out there, anyone on the East Coast. We had a little taste of it yesterday in Chicago, but the last couple days in Chicago, but it has cooled off dramatically.
It's been foggy and cool here in San Francisco, which I'm not complaining about in the slightest. Let's take a look at, by the way, view the transition here. A place where things are not cool. Micron. Mike, you were just talking about this in the green room before we got started. What in the world? What's going on here?
It's the classic meme of the thing like poking the stock saying do something, and then the green bar just shoots through his head. That's what's happening. Yeah, I mean, I did an earnings preview on Micron, and it looked like everything was good. I mean, they are investing in U.S. expansion, which I think is good for potential tariff stuff. I mean, they've just had an insane rally. Their stock had doubled from the low of April. And it just goes along with the story for the rest of the chippies. I mean, AMD, NVIDIA, very similar charts, but I was wondering if it was going to be able to continue. I mean, even when you have a stock perform like this, they still have to just crush their numbers for it to continue. So I don't have it in front of me, but I assume that they demolished numbers and they have some good news for the rest of the year.
It's interesting because if you look at the sector breakdown here, it's not what you might expect with this kind of a move. I mean, sure, tech is up a good 0.8% here, but generally not the world's most risk-on mix. Consumer discretionary and staples both down quite a lot. Discretionary down 1.25%, staples down 1.3%. Not really what you'd love to see. And if we look at sort of where we are on the overall S&P here, kind of a goose egg. And NASDAQ, not much better. I mean, there's that, up, about 0.2% here as we get into the close. So it's pretty localized after we get this, oh no, war. Nope, not war. Okay, ceasefire across these two bars right here. And I mean, it's pretty evident across the various markets. What do you guys make of the pause here? I mean, if all is well and good, are we just pausing to digest, and since we've taken out the previous high, it's off to the races, or does this give you any cause for concern here that we're not finding momentum on a third day?
I mean, volume was pretty light today, so I think the market is just digesting a little bit. Yesterday was really encouraging. We broke through those June swing high levels. So, you know, it makes sense that the geopolitical fear subsided. We broke some levels there. Now we kind of consolidate to today. Economic calendar is pretty light tomorrow, but I think MU earnings, you know, it could help the tech sector tomorrow break through. I think tomorrow's going to be an up day. I don't think light volume here is really an ominous sign after, you know, you get a nice 2-day rally and you break some technical levels. So I think you get a little digestion, people taking off their longs, they'll reposition. I'm going to be positioning myself on the long side tomorrow morning. Kind of sitting on my hands today for equities. I was going to get long SMH to kind of play the MU earnings, but just did not happen. So I think we continue to drift higher.
Yeah, I would agree. I think just looking at volatility alone, we are back in the mid-teens in the VIX. VIX at 1677 closing print. So we are back at the lows of early June, and that was kind of the lowest we've seen since April. So yeah, swift reversal of implied volatility, and we'll see if we can break through to new all-time highs in E-minis. It's craziness.
Yeah, I mean we're basically we're looking all the way back here. I mean, this is kind of the floor on VIX, essentially going back to late March. So this is quite something. I took that technical break yesterday that Thomas is discussing to get myself out of short exposure on the indexes, and so this break above this high on ES, that was enough for me. Goodbye. And then on NASDAQ, of course, same thing here. That was the high. The logic was that the risk reward here, since you couldn't really get out of this range despite whatever news was going on with the US and China detente back, with the war. But then obviously yesterday, the market seemed to make up its mind. And so thank you and good night. So at this point, I am on the sidelines and waiting. I think we're kind of in this strange area here. If we just take a look, let's say, at the continuous NASDAQ contract for the sake of argument, Now, and of course, this is not a tradable thing, so take this with a grain of salt. But we're basically back to this kind of digestion zone where we were sort of at the end of last year going into this year. So when the tariff implementation stuff spooked everybody mid-February, gave us this sell-off, before that, we were sort of wondering what is going to happen after we digested the election and went into the holidays. We're back to that kind of deciding line. And if you look at the same thing in ES, same spot. Now, it's not quite as dramatic looking if you look at the current contracts, but you're still in this kind of digestion zone where the highs live and where the market was attempting to kind of make up its mind about what this year is going to be all about. So I don't think the risk reward to chase this higher with new long exposure is particularly great. But I'm not prepared to continue to fade this kind of momentum. It's going to have to convince me that it's ready to do something different for me to jump in front of it again. Thank God for verticals and risk-defined positions and ETFs like SPY and Qs that let you have smaller size. That's always good. What do you guys think? Is this something that you're sort of leaning into directionally at this point? I mean, vol is pretty low, so there's really no premium to sell here, it seems. Are you laying on new exposure? Seems like you're both pretty bullish, especially going into tomorrow. Is this a reason for people to be looking at overnight futures contracts and going, I need to get long ES, I need to get long NQ before the day kicks off tomorrow? Are we chasing this thing?
That's a scary thought. But yeah, I mean, I think volatility is really low. We're kind of in this chop period. Not a lot's going on. I've been taking off trades for winners less than 50%. I've been closing scratches. I'm just trying to like free up a lot of capital as much as I can while still managing other positions and waiting for current positions I have on to let me know what I need to do. But yeah, I think right now I'm more positioned towards having cash on the side just in case something crazy happens. But at the same time, I do lean a little bit bullish with the strategies that I'm doing. But I'm doing them small to find risk. So like the Micron calendar spread I had was a $387 or $370 debit. So very small trade for earnings. It should work out well if we stick around this 130 to 135 range tomorrow. Because I've got the 135 2-day short option against the long August call at 135. So looking good there. But yeah, just trying to keep risk small and find new opportunities where they present themselves. But yeah, when the overall market volatility is low, it can be a lot harder to find those opportunities unless you're going to high implied volatility equities.
Yeah, I might do something like buying and calling SMH tomorrow. I think with volatility low, definitely keep capital on the sides in case, we get some event that causes that. I don't know what that is right now, We have durable goods tomorrow. That could move the needle a little bit. It seems like we're wanting to see that September rate cut odds increase right now. So I think, that's far away enough that if September increases, it's not signaling something like there's a dire economic, something is happening bad in the economy. It's just that, the Fed is going to shift more gradually dovish. I think that's good for markets. Whereas, if a rate cut expectations increased for a sooner meeting, that would signal something bad is happening. So I think, if the Fed starts to shift, and market rate bets have been going like this a little more dovish, I think we're going to see more upside. We got, also the PCE later this week. We got the GDP tomorrow, although that's the third or final reading. So that number would have to change pretty substantially from the second reading to really shift the focus there. But these micron numbers are good. We've made this gap to new recent highs. Volatility is low. I think that all points to us kind of drifting higher. At the worst, I would say, is we establish a new range to carve out. But in any case, with the exception of something unforeseen right now, I think a sell-off doesn't make sense here.
Yeah, you'd need some kind of
interesting
catalyst, feels like.
Yeah, absolutely. I mean, as I say, I'm certainly not prepared to fade this. But Thomas, you mentioned Fed policy odds. It's an interesting thing that's happening in markets, and it's probably the thing I'm paying attention to the most. This is the SR3, so the 3-month SOFR contract for the end of this year. And this is just a sort of a benchmark for where Fed policy odds are going. And you can see this starting to look a little bit more dovish here over the past several days, which is interesting in the context of what the Fed has been saying. Powell testified for a second day here in Congress today, and it's a very familiar song and dance. We heard it in the wake of the FOMC meeting last week, and it's, we don't know what the tariffs are going to do. We're going to wait and we're going to see. We don't have a high unemployment rate. We don't have a high inflation rate. There's really no reason to do anything until the economy sets off some sort of alarm bells this way or that. And interestingly, the Fed actually dropped a rate cut from their outlook in the summary of economic projections last week. So they think they're only doing one cut next year. The markets are pointedly going in the opposite direction, as if to tell them, no, you're wrong. Actually, it's something else entirely. And you're starting to see it here in the contract for this year. So as ever, this is the price. So the way you get at the yield is 100 minus this 96.27. So this going up is yields going down. And you can see this dovish shift for this year, but the really dramatic effect is actually next year, where you see a lot more rate cuts. Even as Powell says, actually, this should be going lower, the market is saying this is actually going to go higher. And so the Fed is at 75 basis points through the end of next year. 2 cuts this year, 1 cut next. Market's at 120. So the market is essentially saying, not only will you do more than 1 next year, you're definitely doing 2, and about 50-50 shot you're doing 3. What in the world are you talking about? And so this is a very interesting disparity here, because either the market sees some sort of an economic downswing ahead, and it's sort of looking through what the Fed is saying could be a one-off impact from the tariffs, or it's just basically doing the math that the Fed is doing differently, and essentially saying the impact of these tariffs will happen on a different timeline than the Fed is saying. It's going to happen sooner, kind of wash out sooner. So interesting to see the market very much at odds. And even for July, the odds of a rate cut have been rising. Now, they're still very low. So a week ago, we were looking at a 12% chance of a cut. Yesterday, it was 18. Today, it's 25. Now, obviously, that's still 75% probability in favor of no cut at next month's meeting. But 25 is getting a little spicy, especially when the Fed is telling you we are not doing anything. So what is it in your mind that the market is seeing here? Because it'd be one thing if the markets were saying, okay, you know what, you're slowing now, there's an exchange rate between rate cuts now and rate cuts later, because you will have allowed the economy to run in the wrong direction longer. So you're going to have to do more later versus now to catch up. So, okay, we saw this, by the way, in very sort of stark relief last year, and you can see it on the chart here. So when the Fed was lagging last year, the market said, oh, well, so build more easing further out into the forecast. And you see these rates come in. Then, of course, the Fed actually cuts, and the markets go, oh, that was too many, and we correct the other way. So this could be a similar thing this time, but if it's creeping into July, it's much more immediate. What are they afraid of?
I mean, I think it was Waller that that said the July, and it's interesting because there's speculation of him being the successor to Powell, and it's like, is he playing into what President Trump wants? Is he kind of trying to juice his position up to get in line as the next Fed chair, or is he basing that solely on what he sees in the economy? But the SOFR rate, climbing pretty substantially just over the past 3 days, you have to kind of see that as the war risk being taken off. Because one of the risks was, an Iranian response to disrupting oil supply chains, which mostly through its proxies closing the Strait of Hormuz. And, when the ceasefire was negotiated, you saw those rates come up. So if there's less inflation pressure, that would open the door to an easier path of cutting rates. So that's one reason we've seen these rates, this SOFR rate increase over the past few days. So now it shifts back to how are the tariffs, when and if they're going to show through the economy. And it's not just the inflation we've seen. Not through the NFP, but through some other indicators such as challenger job cuts and things like that, there is some weakness building in the labor market, but it hasn't really reared its head through, the NFP, which is ultimately what the market looks at when you're talking labor market strength or weakness. So, we're getting closer to this next jobs report, which I think is, of course, going to be a big headline event that could shift these rate cut odds. But, the fact that the market is kind of in conflict with the Fed's outlook, does the market rally on the market expectations? And if it continues to do that, and if the SOFR rating continues to increase, effectively meaning more rate cuts are coming, is the Fed going to start to push back on that in more of a visible way? It won't want the market to get too out of line with what it expects. So I think you have to do what you always do, which is watch the data as it comes in and, capitalize on the divergence while it's here. And I certainly think, a sell-off, like we said, isn't coming anytime soon. But if this SOFR rate, if you watch this and it makes a substantial break to the downside, I think that would come alongside, a reason for the market to do some selling. So I think you do what the Fed is doing, which is watching the data as it comes in, but ultimately rely on the price action in your trading.
Yeah, I mean, I think that's absolutely something I can get on board with. That the price action is going to tell you, and this is where it gets really, really interesting. To your point, Thomas, we had a kind of little pop over the past maybe few days in break-even rates. Now that oil has come off and that geopolitical element in kind of bidding up inflation, since that's unwound, those break-even rates are right back down. And one of the more interesting sort of disparities in markets here is those break-even rates basically have been falling all year until the beginning of April, where obviously there was a crescendo for all markets. And obviously stocks have since recovered, but break-even rates have not. And they're still sitting at these levels, basically scraping near the lows for where we were sort of early to mid-April, especially on the more time-sensitive, the more kind of immediate 5-year break-even. So while stocks and the break-evens were falling together from mid-February into April, stocks have obviously come all the way back. Break-evens have not, which sort of makes me think, and I'm not prepared to put any more exposure out there on this besides still being long the bonds. It seems to say that what stocks are showing is more sentiment powered, whereas what these break-evens are saying and what then the Fed funds futures, the SR3 futures are telling us is that the market still sees some kind of an economic headwind. It doesn't think that inflation is the issue. It thinks growth is the issue. And it thinks the Fed should be cutting. And it's screaming at them to do it. And the Fed is resisting. And ostensibly, you get to the end of a hype cycle and the market starts to notice. But to your point, Thomas, you probably need a catalyst for them to notice. So you're through the hype cycle of the tariff regime will collapse the U.S. role in global finance. We're off that concern. We've stepped back. We're off the concern that the U.S. and Iran are going to launch World War III. We're off that. Do we think the PCE numbers at the end of this week have some capacity to get us back to looking at why the markets and the Fed are at a crossroads and apparently thinking very different things here? Because the bonds, take a look at the continuous contract here where we can actually see something. There we go. The bonds are creeping higher here to kind of echo what we just saw in SR3, to echo what we see in Fed funds futures. So the bond market is sniffing something out here that maybe stocks haven't picked up on yet. Is this data going to do anything? Or do we have it benchmarked already?
I don't think so, because we're looking at a year-over-year estimate of 2.3%. Last month was 2.1%. So even if you rise to 2.3, that's not far enough outside the Fed's target where it's going to, take the focus off growth, like you said. So, we have the first week of July is going to be probably the biggest week to contain, any potential of a catalyst for volatility increasing, because it's the July 8th trade deadline for, most countries that we're negotiating with. You get the NFP. So I think even if this was a little on the high side for PCE, the market's quickly going to shift its focus into the first week of July, where you get some of these, either these trade deal pauses, deadlines, these self-imposed deadlines are pushed back a bit, like what we've seen already with China, or potentially the NFP comes in really weak. That would be a trigger. If you did get that, how does the market react to that? Because on one side, yes, the labor market weakened over the past month, but that also brings in the expectation for the Fed to cut rates sooner rather than later, which would, of course, translate to economic growth, but it would be, it takes time for those cuts to work its way into the economy, but it would signal that the Fed has now started the rate cut cycle and they're ready to act. And once you get one rate cut, you're more likely to get the follow-on rate cuts, because the center of gravity has now shifted for the Fed. So, I don't think the PCE is going to be as big of a concern for the markets as the following week is, where, trade and NFP numbers are in the picture.
Yeah, it seems like as it stands, I think the market is telling us maybe there's things that people are worrying about, but the market isn't necessarily worrying about it, and they're expecting that we're finally going to get some of these cuts, because these probabilities have shifted quite a bit over the last couple of weeks. And now looking at the December cycle, which is the last opportunity to make a decision, there is almost an 80% chance that we arrive at a 50 to 75 basis point reduction in the current rate. So, and it's actually leaning towards 3. It's leaning towards 350, 375, which is interesting. So maybe nothing happens in July, and then we get consecutive cuts in the next 3. And then that also might explain why there's only 1 for next year, if they're just front loading these based on softer data.
Yeah, I mean, if they front load everything, much like they did last year, right? So if they come out in September and go 50 basis points, and the markets go, whoa, okay, that's not what anybody thought was going to happen. Yeah, maybe that happens. I would say the biggest concern for markets here might not be a PCE number that's too high. It might be a PCE number that's too low. So if PCE comes out not at 2.3, but at like 2, then the markets would go, wait a second. Is the Fed going to see what we're saying here or what? Because we've been telling them that inflation's not the issue. We're going the polar opposite direction that Fed officials are trying to take us. Is this enough? Will they finally notice now? Or are we just going to fiddle past the graveyard here? And if we do, how much more do you need to do to then catch up later? And that'll be an interesting conversation. Obviously, I think the critical input into this, and Thomas, you alluded to this earlier, and Mike, I think that's sort of front and center of what you're saying, is there's kind of hypothetical risks out there, but clearly the markets are not concerned, and you can see just how not concerned they are, at least about the geopolitics, with this reversion in oil that has essentially come back basically to where it started. So if this was kind of where oil prices were at the end of the April spook, and they kind of established a range for themselves down here, and this is the holy moly with Iran and Israel, we're back. We're basically back to that incremental sort of fair value level. We just had some data out of the U.S. on inventories today, Thomas. I know you're watching this stuff like a hawk. It was another big decline. Almost over 5.5 million barrels from the overall inventory, and that's after over 11 million last time. Those are pretty big pulls from inventory, and obviously the price could not care less here. It's looking at Iran. Should we be looking for a bounce here? Does this data tell us that maybe the whole thing is washed out now, and we can get back to supply and demand?
Yeah, so I sold the 61.62 put spread for the August 15th contract. So I see prices going back to like 65, maybe as high as 70. So like you said, we had the 11 million barrel draw last week. For this week, which was June 20th, we had 5.8 million barrel draw. That's 11% below the 5-year average. You also had distillate stocks drop again. That's 20% below the 5-year average. You had gasoline stocks drop. So we're kind of coming into this peak summer demand season for gasoline, which is the 4th of July holiday. Then you get kind of, it levels off until September, where you start to get some weakness as the summer ends. But at the same time, so you have U.S. stocks drawing far more than estimates for the past 2 weeks. like you said today, there's a small bounce in crude oil, but the market is still focused on, the geopolitical risk premium evaporating from this wild ride we've had over the past 2 weeks in oil prices. So I think now the traders are going to shift back to fundamentals. You're trading around 63 and some change. I think that's lower than where we should be. So you get the OPEC saying they're going to produce more, but we haven't really seen that too much, and that's being led by Saudi Arabia, which is going to unwind more of their production. But at the same time, domestic demand in Saudi Arabia is up, so they can absorb some of those barrels that they're producing. So that's less going out into the global supply. So I think we're headed back up around 65 to 70. We kind of had moderation today after this bigger sell-off on the ceasefire news. So I think the selling is pretty much done here. And you have some swing levels from, April and May around 62, 63 that you could kind of play off, if you're doing a technical trade there. So we're at a zone of support after, these geopolitical tensions come out. You had a lot of shorts get whacked out of the market, over this past 2 weeks. So, kind of now positions are going to recalibrate. So I think traders are going to start getting long again. You see prices drift back up to 65 to 70 between that range. And then, you're looking next week at the EIA numbers again, which is going to be for June 27th. So the next 2 weeks, you're really looking at the EIA numbers where there's really strong gasoline demand in the U.S. You have OPEC, saying they're going to produce more, but it's not fully materializing yet. And then you have the threat of, Iranian oil being completely taken out of the market. That's removed. So China is going to continue buying Iranian oil. We had the truth or the tweet from Trump kind of, saying, China, you should be thanking me because you could still get your Iranian oil. By the way, we'd like it if you bought some U.S. oil as well. China hasn't really been a big buyer of U.S. oil this year, but, you've still seen the exports quite strong. So, I think playing for a neutral to bullish position here is kind of the prudent thing to do after you get the geopolitical tensions coming out of the market. You get this really quick 2-3 day sell-off that took us back to the levels where we were at the start of the 12-day war, the Iran-Israel conflict. So I think it's a good time to buy here.
So for the record, I sold MCL calls into this pullback on Monday, and that's worked great, but now it's obviously idling. So I'm sort of on the fence here of what to do next. I might just flip this off and step aside. There's still a good bit of vol here, so maybe something directionally neutral, like an iron condor or something like this, might make some sense. Mike, did you wade into these crude oil waters the past several days? What are you doing here?
I am standing by right now, but no, I did have an iron condor on through the whole thing. So I had the 61 short put spread and then the 71 short call spread in the July 17th cycle. And I just did nothing with it. I watched it fly through the call side, and then I saw the sell-offs, and now it just literally went right between the strikes at 65 and implied volatility got crushed. So that was a roller coaster, but it was a small defined risk trade. Ended up closing it for 80-cent winner. But I would like to get long oil now. If we get a little continuation of this move, I agree with Thomas. I think, in this range, 64 to 62-ish, I think is a decent buy spot. And if we get there, I'll just...
It seems to be right at support, yeah.
Yeah. So I'll just get there by way of the micro crude contract and just do one contract. I found that to be a nice way to get long exposure. You You can do a covered call in there. You could sell a call spread in the main contract against it. But yeah, I'll be looking to buy in that 62 to 64 range. Ideally, we get a swift sell-off closer to 62, and I'll feel more comfortable with that.
Yeah, I mean, for me, if you look at it sort of intraday, I've got a 4-hour chart on here. This kind of becomes a trigger line of sorts, where we have the big reaction and then we kind of carve out this range. So if we end up poking our way through to here, let's say on a 4-hour basis, 8-hour basis, so something that takes us in here somewhere, then yeah, I'm probably looking to just roll the position over into long side exposure. And just do it like that. But the vol here is expensive, so I probably wouldn't do it by buying calls. I'd probably do it by selling puts and having that kind of kicker on it. Because if this thing is gonna respond to these inventory numbers like this, obviously there's a little bit of latency when everybody's focused on geopolitics and nobody's really focused on the underlying, but these are pretty substantial inventory pulls. So you could, I think, reasonably get a little bit of a bounce. Shifting gears here to another place where the action is indeed continuing. In the US dollar, this has not been a happy time trying to pick the reversal here in the dollar for me. I've been short all year, and then on Friday I flipped long, thinking this is maybe a top here, but maybe not. And certainly the building Fed rate cut expectations in the markets that we were talking about are at least one element in this conversation, but it looks like the euro is breaking out here, and that's something that is showing up across all kinds of different currencies. I mean, you see the same thing in the pound here. There it is, attempting to take out the high there. Not quite there in the Aussie, but this thing has been basically listless going all the way back to early May. Not great in the Canadian dollar, although not really making progress the other way either, and sort of anchored in the yen. So it appears to be a kind of dollar versus Europe move, and Europe seems to be winning. What do you guys think here? Am I still... should I be running away from my long dollar position here? Because I am inclined. I think the price action is doing the wrong thing here. But at the same time, when I look at it over a longer term view here, there we go. Come on now. When I look at it, and let's see if maybe we can get a continuous contract here for a little more clarity. There we go. There is this big underside right here, where there was a big range, and we're sort of right there. Is this thing just attempting to stress the last bit on one side before it rolls over now? Or is it just going to keep powering higher? Are we going to 124 euro?
I was playing it, I think, the same way as you. Last week I sold the call spread at 117, 117.5. So I wasn't expecting us to breach this previous June swing high. So I'm on the wrong side right here. I think I'm going to hold on to this, though, for the levels you pointed out, and kind of perhaps a last gasp higher for the euro. On the other hand, you get like the NATO summit today, where you get this pledge by European countries to spend more on defense. So that that right there is bullish. It could be bullish for the euro because if you have more defense spending, that could feed into economic growth. It depends how the individual countries within Europe are going to do that. Are they going to try to raise more money to fuel this spending on defense, or are they going to try to find ways to fund it through cutting spending elsewhere? But you know, that's a longer term implication, and I'm not sure if the NATO summit has, you know, too much to do with the move today. I think it's more kind of dollar weakness. But I'm going to hold on to this short call spread that I have for at least a couple more days and hope that, you know, we reverse lower. If by Friday we keep rising, I'll just get out with a loss on it. But I've been doing long euro trades all year up until last week. I finally thought the dollar was at its point where it's bottomed, and that hasn't been the case. So I'm going to hold on to this for a couple more days, and then I'll abandon it and reassess next week if it's out. But for now, you know, the short dollar trade is still working.
Yeah, my biggest exposure is the Japanese yen. So I'm long the yen dollar calendar spread. I'm long the 44-day 7-2 call, and I'm short the 8-day 7-2 call. That's pretty much a scratch right now, but that's definitely my biggest exposure. But wait, there's more. I also have within the tastyfx integration, I am
fun times. Welcome to the fun world of spot.
Oh yes. It's been real fun. I'm losing in every position I have. It's been great. I'm short the Aussie dollar, very small. I'm long the dollar franc, very small. I am short the dollar yen, very small. And today I got long the dollar Israeli shekel for kind of a very direct exposure. And yeah, all that's extremely small. Like all those positions combined they've all moved like 70 cents. But the Japanese yen calendar spread is definitely my biggest position. But I'm all over the place. I'm just waiting for something to move.
So here from this wonderful integration of spot into the platform is the US dollar Israeli shekel. We can see the shekel is off to the races here. Not anything I'm trading. I usually keep myself to the majors when I trade SpotFX, but I trade SpotFX all the time. In fact, all of my exposure this year to the yen has been through SpotFX, and most of it has been short dollars. Really, because you can get a lot more flexibility in terms of smaller position size, so you can manage risk a little bit more granular than the full 6J contract, which is huge. And so I've been doing that, but interesting spot here for the shekel. Let's see if we can, is that all the back data that we have here? Looks like it. So if we look at where we are here, we're at a pretty significant level. So if you were looking for a US dollar rebound, and for whatever reason your indicator for it was this particular exchange rate, you might say, well, hold on now. Do we maybe have a line in the sand here that's approaching right around here? So interesting to consider. As far as USD franc, let's see here if we can get that up on the screen. No, not seeing it.
Yeah, it's the USD CHF.
Right.
But yeah, that is.
See if we
that one is
there we go.
There you go. That one's even more multi-year extreme. The shekel was a 2-year price extreme. This one is got to go way further back. You got to go back to 2015. That it's kind of crazy.
Yeah, I mean, here is a chart here of where we are. And by the way, note these awesome charts now in the TastyFX tab of the platform. I'm kind of still angling to the idea that maybe the dollar has some kind of a bottoming that's occurring here. Seems to be kind of testing the last line of defense. Looks a little bit better here on dollar Swiss than on the euro, where obviously there and the pound there's already been a breakout. And maybe we're not giving this NATO summit enough due, Thomas. Maybe that's sort of why the pound and the euro are jumpier today. Because and obviously, I mean, Switzerland is not exactly expected to beef up their defenses, and they're not a NATO country, and that's sort of not their whole vibe. So maybe that's what this is. But if the Fed is right, and we're not going to have a lot of rate cuts, then the dollar seems awfully cheap. But the markets are clearly sort of screaming in the opposite direction. So it seems like somebody's going to have to convince somebody of something. And between now and the end of the week, really, it's the PCE data that's on my mind, and not in the sense that it might be higher, but rather in the sense that it might miss. That's really been the trend for U.S. economic data recently. In fact, over the past month or so, it's increasingly turned out soggy results relative to forecasts. And so kind of thinking about if the market is right and the Fed is wrong, then we're in a situation where this data might miss. The market's outlook might start looking more appropriate, and then we might hear a different message from the Fed in July, which is going to be difficult to send, Thomas, to your point, because you have these deadlines, and the view on tariffs has not clarified significantly. Anything else you guys are looking at in our last 5 minutes before the end of the week? Those of us that are macro degenerates really only have the PCE number to hang our hat on, maybe durable goods tomorrow. What are you guys looking at? And by all means, take us anywhere on the board here. What are you watching before the weekend?
So I'm watching for tomorrow nat gas. Because we have the EIA numbers for nat gas, and we've had a pretty big sell-off in the product over the past week. So we're trading kind of, we have this kind of support level, this trend line that we get off the April swing low, and we're trading right near that. The past 4 days, we've had a really good sell-off. We've gone from around 4.2. Now we're trading around 3.6. So we've had a lot of retail longs washed out in their positions. We're near this support level, and we got the EIA numbers tomorrow. I think the median survey estimate is around an 88 billion cubic feet build. So, those numbers come out tomorrow. We've had this extreme heat. Perhaps the build could be less. Of course, if it comes in under, that's bullish. But is it going to be seen as kind of a risk clearing thing, regardless of what the numbers are? And are we going to revert higher and stay within this range that we've been trading in between April and May, all the way from 3.4 to 4.2? I think we stay in here. So that's kind of, I have a trade on right now. If I wasn't long, I'd get long right now. But my nat gas position, I have a short put spread at 3.25, 3.3. So I feel pretty comfortable with that, even though we've drifted lower. And I'm also selling the call spread at 4.5, 4.6, which I've been in for 2 weeks now. So that call side has been doing a lot better than the short side. But I totally expect us to stay within that 3.3 to 4.5 range, but now with upside bias since we're near the lower end of the range here. And you know, the thing is, there's been this extreme heat wave right across the East Coast where a lot of natural gas demand is concentrated, and yet we've sold off. So part of that is the war resolving, but also part of that is if you look at displacement of natural gas demand from things like solar and wind, along with this heat wave, it's been really windy and really sunny. So that has displaced a lot of that demand for natural gas. And that's why these numbers may come in on the higher side, despite, you know, a pretty substantial heat wave. So the EIA numbers, regardless of what they are tomorrow, I think we're going to find some upside pretty soon. And that's how I'm positioned. So that's how I'm playing natty gas.
Yeah, that was my first look too. But outside of that, I think